And we are live. Hey, everybody, this is Roberto Blake helping you create something awesome today. Welcome back to the YouTube channel. So we are doing a live stream today. We're going to talk about all things YouTube business. So if you're watching the replay of this, you'll want to definitely check the timestamps and all of the reference links in the description below for all the resources we'll be talking about. If you happen to be watching live right now, or even if you're watching the replay, do me a favor, share this video everywhere with every creator that you know. We want to run up the live stream numbers, but we also want to run up these replay numbers because we're going to be giving you all the details and information you need to run your YouTube business. We're going to be talking about the importance of setting up an LLC or an S corporation if you happen to be here in the United States. For those of you abroad, you're going to have to figure out the equivalent of doing this for yourself. We're also going to be talking about YouTube money in general. We're going to talk about multiple streams of income and monetizing. We're going to talk about brand deals. We're going to be talking about management for those of you who are further in your YouTube career and in your YouTube journey. So we're going to be going over all of those things. We're going to be taking questions from the chat. Priority will go to, obviously, the super chats in the live stream, of course, for answering questions, but we'll try and answer as many as we can. If you're live and you have questions, put a Q in front of your question in the chat so that I know it's a question, so I can star it and highlight it here in Streamyard later so that we make sure that I get to it and that I don't miss your questions. So that's how we're going to be doing this. And shout out, of course, to our sponsors, our lovely sponsors, which we'll be talking about how you can get long-term sponsorships like your boy and have those partnerships and relationships. So, of course, shout out to Streamyard. That's how we're doing this right now on YouTube, X.com, formerly Twitter, Twitch, Facebook, and LinkedIn Live, all at the same time. Didn't feel like going through the extra work to do Rumble. We'll upload the replay to Rumble, and we will make sure that you get clips of this in Instagram and my other clip places. So we don't do TikTok over here. Anyway, and also you might be seeing from time to time in the stream a visit from Mr. Tom, my cat. He is a rescue here. He's not thrilled about being on camera, but he is thrilled about being on my lap whenever I'm in the office. So all good things. Something else you can look forward to throughout the stream, though, is a plan that we're going to do. And I see your questions here. Real quick, I'm going to also remind you, not only are we doing this with Streamyard, which is a great sponsor, get them in the description down below. Try a free trial, see for yourself. But OpusClip. OpusClip is one of my newest partnerships. And some of you may have noticed I've been posting 3 times a day to my Instagram Reels this past week. And one of the reasons that I'm able to do that is because OpusClip uses AI to automate this so that I can take my live streams that I produce with Streamyard, get multiple clips, and schedule them. And so I'm scheduling my clips for LinkedIn, Instagram, and I'm also going to be doing the manual uploads of those to Twitter. They don't have the scheduling for me for Twitter yet, but I'm scheduling those to that as well. And also, I'm going to be experimenting with YouTube Shorts on my highlights channel and posting daily clips, if I can, to YouTube Shorts. But we can only post the ones that are under a minute long. We can post the longer ones to Instagram. So I'm using all that to do AI, and it means that it takes me about 30 to 45 minutes to do a week's worth of content for short form. To post 3 short form videos a day across multiple platforms takes me about 45 minutes to set up my whole week, as long as I have the footage. So shout out to OpusClip, and thank you for partnering with us. Also, my friends at Kajabi is how I run the back end of my business. We're going to be talking about online business, some of the product side, some of the things you can do. We've actually done a workshop here on the channel that you can watch where you can see how to set up a membership website of your own. My membership is currently bringing about $4,000 a month outside of YouTube with my own membership platform, Awesome Creator Academy, where I run my pro group membership. And so that's been going extremely well. So we have all of that because of Kajabi on the back end. And unlike YouTube, where I have to split 70-30 with Kajabi, I keep my money and I just pay my payment processors, which are Stripe and PayPal. So now that we've gotten all the sponsorship plugs out of the way, links are, of course, in the description. I can start to get to some of your comments here and some of your super chats. I'm going to highlight those. We have some really good questions here. Shout out to Andrew Can in the house. Yeah, OpusClip is great. Living on a Dime. Good to see you guys. Yes, we all love Streamyard. Very, very much, actually. Thanks to our new channel member, Charles Moreland. Let's see. Tom is named Tom because he looks just like Tom from Tom and Jerry. He's got the white paws, the green eyes, and the gray fur. So that's why Tom is named Tom. Question: how do you organize different ways of payments more easily come tax time? Different ways of payments more easily come tax time. Okay, so Andrew, I need more context on this question. I'm going to tell you a little bit. This is not financial or legal advice, by the way. Get an accountant, get a bookkeeper. I recommend Bench as a bookkeeping and accounting service, bench.co. They're who I'm using to do my books. They're also what's helping me with my back taxes. A couple of years back, I had a not great accountant, and before that I had H&R Block, and you do that kind of thing. And there were like back taxes that were all screwed up for me. In fact, the IRS owes me $20,000. I'm still getting that worked out. So now I have Bench, and they're helping me with certain things with those back taxes. There are things that I paid the government, for example. The government has a record of it, but maybe not of the filings. They got behind during the pandemic, all kinds of nonsense. But good news for me is that all my taxes are getting sorted out and all my back taxes are getting paid, but I have good, clean books so that we know exactly how much I made, and we can then work out how much I owe, how much the government owes me, all of those things. So definitely would recommend Bench. What you want to think about when it comes to all of this is I recommend paying for a bookkeeping service. And the reason we pay for a bookkeeping service is so that we have clear records of everything for our accounting. We do not want to do this ourselves, right? And this is very important. This also makes it much easier when you need to, if you have a bookkeeping service and you ever need to switch accountants. The good news is you have a long standard record of good books. And this will also help you if you ever decide to become a homeowner. When I bought this house, one of the best and most important things was I had all of my books in order in addition to my taxes when I bought this house in 2021. So I bought this house in October 2021, a little over 2 years ago as a homeowner, and I bought it as a business owner. And so because I had my LLC in order, I had my tax IN number, and they can verify all of my income when I was buying this house. This was extremely important. Is worth paying the fees to have the bookkeeping and to have your taxes in order and to be able to have all of those financial records and transactions. Okay. Now, the way I did it with Bench is because they have human accountants and they have really good tools and a system, is I linked the cards that I use for my business. I do not commingle funds. I have business accounts and I have personal accounts. And I have the business credit cards. And so I was able to link all of those digitally through the system, and it was able to track all of those payments. Now, beyond that, you can always export all of the PDFs for those things. I also directly linked Bench and Stripe, and I did an accountant-based and bookkeeping-based email account in my PayPal business account to my bookkeepers and accountants. So they were able to import the documents they needed from PayPal. PayPal and Stripe also aggregate all of your business information for the year, and they give you what's called a 1099K. Now, when we do stuff as content creators, we are not employees of these platforms. You might feel like YouTube is your employer because of the algorithm and the treadmill and because it's your full-time gig. And I understand YouTube's your full-time gig, but you're not a YouTube employee. They're not paying for example, YouTube does not pay for your taxes on your YouTube ad revenue. They do not pay the taxes for you. You still are accountable to pay your taxes to the IRS. And this is why it's important for you to get a bookkeeper and accountant that explains these things to you. So you get a 1099 as an independent contractor from YouTube. You get a 1099 as an independent contractor from Twitch. When you're me, you get a 1099 from Amazon for your book sales. Because I have a book, I get royalties on that book. Our YouTube partner program income is also taxed as royalty income. So for those of you that are expats or internationals that might be doing business in the US, that's important because you'll have to sign extra documents with YouTube declaring for that. So that based on whether they're treaties that exist with your country, so you don't deal with double taxation. Okay. Again, very important. I hope those of you who tuned in are still watching, because this is stuff you do not get from a lot of other people who talk about this. This is like the detailed, granular information about this. And I'll try to answer any and all of your questions. So the thing is, you're going to get a 1099 from YouTube. You're probably, if you're doing any affiliate links, whether it's the Amazon influencer affiliate program or whether it's other affiliate programs, no matter what it is, you're most likely going to also be getting a 1099, whether it's a 1099 or a 1099K, just depends on what their classification is. You'll get some type of 1099 as an independent contractor from each of the platforms that you're monetized on, each of the affiliate partnerships that you're doing, but also you should be getting this from your brand deal partners. And all of them are also going to require you to submit a document called a W-9. So you're going to submit a W-9 to them. Now, this is also true for any of your other contracts where you're getting paid out, whether you're doing freelancing, whether you're doing independent contractor for a brand deal and sponsorship, so on and so forth. So you're going to need to submit a W-9 to the platforms or to these brands. And you're also going to receive from them at the end of a taxable year, a 1099 typically. And so what you're going to do is you're going to get your 1099s all to your bookkeepers and to your accountants, and they're going to reconcile that against the income levels tied to your bank accounts, credit cards for money coming in and out. Money coming in is accounts receivable. Money's going out are accounts payable. And so you have that. They're going to reconcile from that to document for the IRS to determine how much of your income is taxable, because you're going to see here's revenues coming in, here were expenses against your business, here are deductions that you are claiming under the tax code that you're allowed beyond just the difference in what you spent on your business versus the profit you made, which is called net adjusted gross income. And then they'll tax you on that. And then what's remaining from that is your true net income. The money that you keep after taxes is your true net income. The money that you're taxed on is your adjustable gross income. So income minus expenses and minus deductions you qualified for. The reason you get the accountant is they will know better than you what deductions you qualify for in the tax code, and they'll be able to run those numbers for you. So that's how they'll determine that, and they can save you a lot of money. Now, do you need an LLC versus an S Corp? If you have employees, you probably are better off with an S Corp. If you have well above $100,000 in net income after taxes, you're probably better off with an S Corp. And the reason why is with an S Corp or S Corp declaration, you'll be able to give yourself a salary, but also what's called distributions, which means you can give yourself a salary and you'll be taxed at a lower income bracket than that. But you can also get another form of payment called a distribution, and you'll be taxed at a lower income because you're splitting these up, and your salary and wages is going to be from you as a employee of your own company. You're going to take that, and then you're going to take distribution as an owner. So now you have two different taxable events, but because you're splitting the difference on the money, let's say the amount would normally be $150,000. If you took like $85,000 as your own salary, as as a reasonable compensation as a salary, but then you took the rest in distributions, those are two taxable events that will put you at a lower tax status for each of those different incomes. And so now, instead of being taxed progressively for the amount of money higher than a certain bracket on going over 150,000 from one source, you're now taxed at a lower bracket on two different income sources that have two different tax classifications, your distribution being passive income and your salary and compensation being considered wages. And so, again, I'm not an accountant. Talk to an accountant. So it's very important to understand these things. And that's why some people will go with the S Corp declaration. Now, with the LLC, what you're getting is the ability to have limited liability insurance. And the limited liability insurance is important because I have that through a company called Hiscox. And I did a couple of things. I got general liability insurance, limited liability insurance for errors and omissions, which some people call media insurance. This is, CYA, cover your butt insurance. And this, is errors, omissions, dealing with your brand deals, in case you say something that someone wants to sue you over and you want to dispute it. And so for $160 a month, I'm covered for up to $2 million on that and covered for up to $20,000 on gear. And when I had $10,000 worth of camera gear stolen, I was able within about 2 to 3 weeks to get full reimbursement for that and buy back all the gear that was stolen. I had about $10,000 worth of gear stolen. I was able to bill out for that and prove it. And with the police report, the incident report for the event and the hotel, and the serial numbers that I have logged through, and the receipts to prove that I bought and owned these things because I bought them all through Amazon, MBH Photo Video. So I was able to prove and document that. Always keep documentation of all of your business purchases. Purchase them through your business account and credit card. No commingling funds. The other reason you get an LLC is so that you can separate and have a business account, a tax EIN number. You're now a separate entity than your social security number. EIN is employer identification number, EIN. So you have a tax EIN. So it's basically a business social security number. You'll also get a DUNS number, and that's for your business credit. You'll have the ability now to get limited liability insurance protection, which I told you the value of that separates you as an entity. You'll also be able to get business bank accounts. And the benefit with the business bank accounts is now you don't commingle the funds. And so now those funds are separate. There are perks to business bank accounts that may not happen from your traditional bank accounts. And you can accumulate business credit, and you can gain business lines of credit. You'll want this for things like travel cards for your events, your collabs, all of those things, and to accumulate travel points. So that is, the kind of things that you'll want to deal with. And so when it comes to also different forms of payment, Andrew, you'll want to consider if you're making a significant amount of money. Let's say you're doing brand deals. I recently ran into some issues with PayPal with doing holds on my account. You can invoice and take things through Stripe. If you're making over $100,000, it might be worth it to use a payment processor of your own and get your own merchant account with authorize.net. This is something my friend LeBaron talks about as a business owner. He owns Popcorn World. So, he was telling me about that. But I also remember authorize.net from my days in web hosting. And so getting your own payment processor and gateway and the ability to take e-checks could be valuable for you. So now you are paying less fees than the wire transfer fees that you would pay with your bank. If you do direct deposit through your bank, typically, you'll pay with the brands. If they, instead of doing a wire transfer, you'll pay less fees with this, usually less than 1% fees if the number is high enough. Also, if you use a merchant account through authorize.net and you're doing very good money in cash flow, they will also float you lines of business credit or a business loan if you want against your cash flow. Now, PayPal and Stripe also are willing to lend you lines of business credit. Right now, PayPal would actually lend me $40,000 in business credit. I believe Stripe will lend me $25,000 in business credit right now due to the cash flow that I have going through them. That's the other benefit of this LLC, and being able to also tie that to these payment processors is now you get access to capital if you're doing business very well. So what a lot of YouTubers take for granted is, unlike a traditional business, I'm a YouTuber, a bank won't give me a loan. But if you actually go through and you set up a business entity and you can prove cash flow, you actually can get lines of credit, and you can have capital at your disposal when you need it. So this is the big boy stuff. This is the big girl stuff that a lot of people will not tell you, will not talk about, So again, I'm here to give you the goods. A lot of people, again, there's a lot of places you can go for advice on content creation. There's a lot of places you can go to learn how to grow. But when it comes to business, monetization, the money side of content creation, I believe that I stand out and that I deliver, just a different type of value. And, it may not be for everybody, but I feel like if you know this stuff, you will have an advantage, and I'm here to help you have that advantage. So there you go. Good to see all of you. Good to see Little Crafty Nook, my man Zach Talks Tech, Andrew Can, Chantel Hills, Stanley Orchard in the house, Grape Tea News. Thank you. Thank you. Bella was here. Appreciate you. Chelsea, appreciate you. So I'm going to get to some of your questions and your super chats here. We got Scott T, Auric Unity with the $10, showing you some love. We'll watch the live later, but letting it play in the background. Thank you. Appreciate that. Zariah got the 12-week free creator playbook that is linked in the description. He says 10 out of 10 recommend. Every single one of you. We've got about 160 of you watching live right this minute. First of all, every one of you, I need you to like this live stream right now. If you're watching this, and if you're watching the replay, drop a like for the YouTube algorithm. But every single one of you watching live or the replay needs to click the link at the top of the description and get your free 12-week creator playbook. I developed this free 12-week creator playbook for you, and it's actually going to really help you, especially if you're just getting started. But even if you're a content creator who's getting back into the game, maybe you took a break. This is 12 weeks to get yourself ahead. And so week 1, I would tell you, regardless of where you are in your YouTube journey, even consider reevaluating your audience avatar and really understand exactly who you're creating content for, like in detail. You want to know everything about who this type of person is, not just their demographics, like their age, but their psychographics. What brands do they love? That's who you're going to partner with on your brand deals. What brands does your community already use, already love? What's going to be easy sell for them? How much money do they have to spend with you? So that's going to be important. Niche down to your community. Niching down is not about just picking a topic. Niching down is about taking your passion and your ability and understanding what allows you to play to your strengths, and then marrying that to a perfect market fit of not only who is a big enough total addressable market, but also how much money is in that market. Is this profitable so you don't end up a starving artist like a lot of YouTubers? Become a master storyteller. Spend a week trying to put yourself ahead on becoming a master storyteller. I recommend you read a couple of books. You could read a book in 1 week that would help you become a better storyteller. I recommend Made to Stick by Chip and Dan Heath. You could also read Story Brand. These 2 books would help you become a master storyteller. Week 4, I recommend dedicating an entire week of 20 to 40 hours just mastering your video editing software and making sure you know the shortcuts and that you understand it better, because you will save time if you master your video editing software and don't just wait till you're trying to put out a video to watch a tutorial, but get ahead on this. Making better thumbnails. If you spent a week just getting good at thumbnails, your views will go up. Organizing and schedule. You have limited time. You're a working class creator. You work a 9-to-5 job. Getting your time and calendar blocking with Google or Notion could really help you. And if you plan out a schedule for your content, if you're doing brand deals, planning out and scheduling out the deliverables for your brand deals, getting ahead of that, you could get them to go another brand deal with you. You could get them to renew. You can make more money this way. I actually already am well on track. I've locked down more than 6 figures. I'll be honest with you. At this point, it's multiple 6 figures of brand partnerships going forward for the year already. I'm literally just waiting for the ink to dry. And the only reason that's going to work is for one of my partnerships, I've already over delivered for them so much that I know that 6-month contract is going to renew. And so I already know that going in. Had a great conversation with them. So organizing and scheduling is important, and it's powerful, and it can make all the difference in your creator business. Get into sound design. That can, really spice things up. Learn more about motion graphics. Tune into these live streams, like we have one coming up that is an analytics deep dive. Learn more about YouTube analytics so that you are doing what works for your audience and you're not going off intuition. You're going off of data going forward. Learn to master your camera gear and your camera equipment. look at me, I got switchers. Like, figure out your branding and your aesthetics, and also spend more time on your, ideation, your ideation. And in the guide, we go through this and we break more of this down. We're also going to be getting you soon a, what do you call it? We're going to be getting you a 12-week challenge on this soon. We're going to be getting you a 12-week free email course. So if you're not downloading the 12-week creator guide, it's 100% free. And I highly recommend you take advantage of it. But, enough from me about that. Let's go to some of your super chats. So Charles Moreland, we'll get into more and answering your questions, by the way, about LLCs, the business setup. We'll talk about sponsorships more. We'll talk about long-term brand deals, contracts, and we'll talk about partner managers here in a minute. But we got a question here. So Charles Moreland is asking, for new channels and creators, what do you suggest is the best format for getting content out there? And I guess you're asking if it's live streams. Okay. If you're a new content creator, here's actually what I recommend. If you're a new content creator, I recommend that you get into Instagram and you go daily on Instagram stories. And Instagram stories can be, anywhere from, 10, 15 seconds at a time, pretty much. I recommend you highly get into Instagram stories. And I'm going to tell you why. Instagram stories is a low cost, low effort way to get over your anxiety and your lack of camera confidence, and to build up to getting used to talking to people, or even getting used to talking to no one at all. So if you get more into Instagram stories on a daily basis, one, you're building up the possibility of discovery, and you don't have to do overly edited, polished, produced content there. And with Instagram stories, it goes away after a certain time. So you also don't have the anxiety of this thing hanging around the internet forever. So with Instagram stories, you're going to be able to get over the camera confidence issue very quickly. It's going to compound. You're going to be able to get past speaking and delivering coherently and concisely and getting comfortable. You're also going to be able to possibly get some feedback that won't feel nearly as harsh as, say, the YouTube comment section, and that will kind of just accustom and acclimate you to this content creation thing. So Instagram stories is a good hack for that. Later, this can become a growth strategy, but the main thing is to actually just use it as a way of even considering it somewhat throwaway content, so that you can power and just speed through getting much better at talking to a camera and thinking about how to talk to an audience, and making it a habit so you're not self-conscious when it's time to record. So that's going to be a big deal for you. So then when it comes to YouTube after that, you're going to be more polished on YouTube, and you're going to want to go there. And you're going to want to initially, in my opinion, start with regular YouTube videos. A lot of people will tell you to start with shorts. People are doing that because with shorts, they feel like they're going to get more views, and that's going to validate them. And then they're going to feel motivated to keep going. And if that's your personality type, then you can certainly start with shorts. If you are the person who's easily discouraged, then shorts and the randomness of that and the fact that you could get some more views off of that might make you feel better and make you feel good enough to keep showing up to YouTube. But that's mostly just a confidence issue on your part at that point. All right. So then what I would say is, strategically, regular videos on YouTube are your bread and butter. Once you get to at least the threshold of maybe 100 subs or more, I think it's actually okay to start live streaming even to a very, very small audience to get used to the idea, and to start massively accumulating watch time a little bit faster. But I would only do it maybe once a week, unless you're a podcaster or an info dump kind of channel. Otherwise, the live streams won't help you. But if you're delivering tremendous value, or let's say if you're a tutorial channel, you could actually do that very early. If you're a tutorial style channel, a crafting channel, a how-to channel, an art channel, then it makes sense. Or if you're a podcast style, obviously. So then you'll get the watch time requirements. Then you will get the ability to monetize on YouTube and get the 4,000 hours of watch time a lot sooner. I actually have a video on this, on the strategies for getting 4,000 hours. If you guys want to watch that, I'll try to link it in the description later or on the replay here, but it's on the channel. You can absolutely find it in my playlist on, starting here on YouTube, or starting if you have 1,000 subscribers. I have playlists like that. So that's my thought is if you lack confidence, maybe you go with YouTube Shorts because you'll get more validation a lot faster. But traditionally, the best thing is to make regular YouTube videos. And then if you need to accumulate the watch hours, then the live streams. If you're struggling for subscribers, Shorts can be a shortcut to subscribers. It'll get you more views, could convert to subs. They won't be the same people who will watch your live streams or your regular long form videos, by the way. So if you're looking for that, I would tell you to emotionally separate it, and that's not going to work out. But that's my thought on the best formats and the best way to approach YouTube as a beginner. So we got Dolwit Dad. Thank you for the $5 super chat. So Dolwit Dad says, when I promote affiliate links like for Opus, TubeBuddy, StreamYard, etc., should I mark, state, paid promo, or call them sponsors, or just links? If you're in a traditional sponsorship like me, you disclose them as sponsors and just say, oh, these are my sponsors. If it's an affiliate link, then you have a disclosure that's an affiliate link. I usually have a disclaimer at the bottom. I have to add them to the live streams and the replay usually because I do the sponsor stuff first, and then the rest is, links to resources, but then I have to go and make sure the affiliate disclosure is there. So just make sure that you're verbally disclosing and that in the description you disclose, and then you should be fine. If what you're asking is, oh, do I need to check the paid promo box? You can if you want to, but it's really more for sponsors per the FTC guidelines. So I would go more in that realm. And I think as long as you have a disclosure and description, even a catch-all disclosure at the bottom, I think it's more than fine. So that would be my answer. Keela asked, question, how do I get to know brands so that they can work with me? Okay. So if everyone's okay with it, I can circle back to your questions on LLC, business accounts, and maybe even tax stuff if you want to. But if everybody's cool with it, I can actually answer this question around brand deals, and I can kind of move into a segment and a spiel around brand deals and sponsorship if everybody in the chat is okay with that. So, if that's the case, then I'm happy to pivot to that, and then we could always circle back later if everybody's good with that. So it seems like you guys might be cool with me going into the brand deals conversation. Okay, excellent. So brand deals. When it comes to brand deals and sponsorship, I've done multiple videos on this. We even did a free workshop on the live stream side of the channel here. We even did that, and we talked about brand deals and sponsorship specifically. When it comes to brands, what I recommend is you think about who you actually want to work with. And I think this is why it's important and why we talk about in the free creator playbook, figuring out your audience avatar. You need to describe who your audience is, and your audience is not your subscribers by itself. Your audience is actually the group of people that align with you on the content and potentially could align with you on the content. And you need to consider who they are. What brands do they already spend money with? How much money do they have to spend in disposable income on average? What brands are they already familiar with? What problems are they trying to solve? What goals and lifestyle do they have? What aesthetics do they like, right? So once you understand who your audience rocks with in terms of brands, you can start to put together a list. What I like to do is I usually like to make a Dream 100 list. We teach this in the Awesome Creator Academy Pro group specifically, and it's something I'm working on for the Brand Deal Secrets course, is we build out this Dream 100 list. And the Dream 100 list is 100 brands we could say yes to, 100 brands that we would be happy to work with and to represent, and that represent and our values and the values of our audience and our community. So the thing is, it has to be a yes for the audience and a yes for us and our values in order to work with these people. So we make a Dream 100 list of things that we think are okay. And then we could cull from that down and say, okay, for these reasons, I'm taking this brand off the list, this brand off the list, until we get a reasonable amount of brands that we could say yes to. Maybe half the list goes away. Maybe 2/3 of the list goes away. But the thing is, we at least start there. And when we cross someone off the list, we should write down some notes on why. I recommend making an Excel document for this. This is something we're going to be doing in the Brand Deal Secret course. We teach this in Awesome Creator Academy. We teach this in the Brand Deals workshops. This is something that also the template for the spreadsheet is something we're actually adding to the Brand Deal Starter Kit product for those of you who already have that or who buy it in the future. And what we have in this Excel document, what we have in this spreadsheet, basically, in this spreadsheet, we have here are the list of brands in our list. Okay. Here are the reasons to work with these brands and why we like these brands. Here are some things that give us caution or might be red flags or be a reason to take these brands off our list. So it's basically pros and cons. It's here's the brand names. Here are the pros and cons of working with them. Then we go when we look for contacts at these brands. And you can do that largely. Kayla, you're asking this question from LinkedIn. LinkedIn is one of your best resources to find a contact and get an email for someone who works at these companies. So you have your list of here's the brands. Here's the pros of working with them. Here's the cons of working with them. Here's a contact at the brand that we could reach out to. Okay. And so we put all of this into a spreadsheet. We also put in the spreadsheet other creators who work with and have been sponsored by these brands so that we have a reference point to compare who the brand said yes to, what the quality of work is that they expect from a creator, because we can base that on who they've worked with. And in terms of figuring out who can we work with, we could start by looking at creators in our niche, then look at who they're sponsored by since they have to disclose their sponsorships. And we can do that by searching hashtag ad. Hashtag ad, hashtag sponsored. We can search that through a creator's content. Usually a good source of that is Instagram. Brand deals are more abundant on Instagram, believe it or not. And we can figure that out. And so once we know what the brands are in our niche they're sponsoring, we have a really good basis. Now, something we offer in the Brand Deal Starter Kit over at awesomecreatoracademy.com is we have a master list of over 100 brands that work with creators. I think we might have sorted some of those by niche or industry as well in the Excel document in the spreadsheet. We might have had tabs in the spreadsheet where we did it by industry. I can't remember, or if we did that in the course product, but which is coming soon. But we have a master list of over 100 brands that work with creators in the Brand Deal Starter Kit. And I do not believe there's anywhere free on the internet that list over 100 brands. You might be able to find a list of 20, 30. You might be able to find some per specific niche. But I think we're the only ones that have a list of over 100. And so that's in the Brand Deal Starter Kit. Now, when you have this spreadsheet that for your Dream 100 list of the brands you can work with, and when you're narrowing this down, you also kind of, in my mind, need a column that it goes to, are they a hell no or a hell yeah? And you should only really work with brands that are a hell yeah for you. So, that's how we plan this out. And when I would say making sure that, you can work together with the brands, I would start acting like an evangelist for the brands. Now, that doesn't mean fake like you're already working for them. It means be a supporter. I think you should be following all the brands that you want to work with on social media. And I think you should be following them with notifications on. And I think you should be their biggest supporter. And I think when they're trying to accomplish something, you should be on top of it, commenting, liking, sharing, reposting, doing everything to help the social media person accomplish that. Because then when you reach out to what will usually be the social media person running the brand account, they'll already know who you are. They will already feel like and appreciate the support and see that you can offer value for them because you have offered value for them. So part of all this is, I tweeted this the other day. You guys really should be following me for a lot of free nuggets, free game over on Twitter, but x.com, formerly Twitter. But I always tell you, don't think of what the brand can do for you. Think of what you can do for the brand. And then also don't think of what your fans can do for you. Think of what you can do for your fans. So you should be aligning yourself with your super fans and also with the brands that you're a super fan of, and you should be acting like a super fan. You should be cheerleading and evangelizing the brand before they write you a paycheck. I know everyone likes to say, oh, exposure doesn't pay the bills. Oh, don't work for free. Literally, when you start YouTube, you're working for free. Number one. Number two, literally, when you start YouTube, you are banking on the idea that exposure pays your bills. Exposure pays your bills. What do you think ad impressions are? Advertising pays your bills. Ad exposure pays your bills. There's a monetary value to the exposure you bring to a brand. Literally, exposure pays your bills if you're a content creator. Not joking. Every content creator wants more exposure. Every advertiser and brand literally wants more exposure. Now, again, it's not popular to say that. It's not popular to say that. People are not a fan of it. People don't like that because, again, the overused buzzword of today is the phrase exploitation. And the thing is, it's only exploitation for the naive and the uninitiated. And we are initiated, aren't we, Bruce? The reality, deception, tools, very effective to the uninitiated. But we are initiated, aren't we, Bruce? That's my Bane impression, by the way. I do voices sometimes. As anyone familiar with the stream knows, I do impressions and voices. I loved Robin Williams growing up. So anyway, the uninitiated and naive are exploited in exposure schemes. The initiated and the savvy figure out how to leverage an opportunity and saying, I'm going to make myself zero risk to the other party, because if I make myself zero risk to the other party and I can get my foot in the door, I know I'm the type of person who can hustle and turn that opportunity, the network access, the relationship access, and the exposure. If I know that I have a plan for what to do with that attention, the exposure is worth it to me. It is not worth it to someone who does not have a plan. And that's even if you don't have an audience. If you have a plan and you have confidence in your plan and you have the ability and you say, if only I got the opportunity, if only I got the exposure, if only people put me on, I know what to do with that. If you're that type of person, then working for free and working for exposure is leverage for you, because it's all you need because you have the ability. People without a plan, people without the ability, and people who don't know how to leverage it, oh no, they shouldn't work for free and they shouldn't work up for exposure and they shouldn't value exposure, because for them, it will just be a waste of their time and they'll feel terrible and they'll feel exploited. But that's about positioning. It's about knowing where you are. Someone who knows what to do with it, and someone who has the skill and the ability, all they need is the opportunity. So whatever it takes to get the opportunity, even, hey, I'll work for free and de-risk you because I know that I will so impress you that you'll want more of what I offer and I'll be able to name my price. That's the play if you are that confident and you have that plan and you're a hustler who knows what they're doing, and someone who is capable of risking the downside and saying, okay, if it doesn't work out, I'll just take another swing, another at bat. That works out when you also have the leverage or luxury that things not working out doesn't mean that you're homeless, doesn't mean you can't pay your rent, doesn't mean you can't pay your bills. This is also the leverage that younger creators often have. They're younger creators who know that they come from a good family and that failure means I'm going back to mommy and daddy in the suburbs. They can take as many swings and at bat and risk, and that's why they can work for free. But on the other hand, older folks who know that they've got it covered, they've got a good job, good salary, they got a business already, they're dual income or something like that, kids are out of the house, those people also can take swings and take at bats, and there's not a lot of downside for them to play the exposure game as well. It's the people in the middle. It's the people in the middle who really can't afford to do those things a lot of times, and so they have less cards to play, less leverage, and so they can't take those kinds of risk and those kinds of chances. And so they're a little bit worse on the struggle bus when they're in the middle. And that's where a lot of people are typically, and I would say their mid-20s and in their 30s, because they may not be, and this is not everybody, I'm just saying generally, that they're still working class creators at that point. They have a 9-to-5 job, but maybe they're not bringing home a ton of bank, and every minute that they're not spending with their family matters a lot more, and so on and so forth. But for people that are in a position where they have a little bit more luxury or leverage, they can take a lot riskier plays, and all they need is the opportunity, so they can take wild swings. And that's the advantage. And it's also a big thing no one talks about is undisclosed advantages, and sometimes less than obvious advantages. So some people have these, what you might call unfair advantages built in. And that could be a matter of age. It could be that you're super young, so you can screw up a lot more, or maybe your parents have your back, or you're older, you're established, and this is extra and swinging for your dreams. If you miss, it doesn't matter because you're still stable. So, if you want brands to work with you, you have to create very little downside for them and maximum upside. And I think I've given you guys a lot of details, extravagant details on how to accomplish a lot of that. So hope that helps. I think that was a lot when it comes to like brand deals. I think that was, there's more we can talk about. We can definitely talk about some things like management, getting people who can help you find brand deals in terms of management and those sorts of things, if you guys have questions about that. But we also, I want to try and make sure that I get to some of our previous super chat questions if I didn't already. So we got Dole Whip Dads, we got Charles, we got Scott. We have Lois. Thank you, Lois. Lois has been a regular supporter. She has been doing a lot of super chats, super thanks, super stickers, and also commenting on everything. So I appreciate you, Lois. Leonora, $5 super chat. So Lois asks, question, should you wait until you make money from YouTube or related to YouTube to open a business bank account as a creator? So this is a very good question. When you want to open a business bank account, or when you want to start an LLC, the cheapest way to get your LLC is to actually file with the Secretary of State. Now, I've tried almost every method. So when it comes to starting an LLC for your business, because I've started multiple LLCs before, primary example, an LLC that I started after I bought this house, so that you can, as a creator, you might want to consider learning about LLCs and trust, and you might want to put your real estate in a trust for your family. Look into something called the waterfall method used by the Rockefellers for long-term planning. That's a whole nother thing with estate planning, legacy planning, and real estate. But if you buy a house as a small business owner, look into trust and look into an LLC. So again, I've filed LLCs multiple methods. I've done it with Stripe. Stripe.com, the payment processor, has something called Stripe Atlas. You can do an LLC through that. They'll usually incorporate in Delaware for you, which there's some tax advantage to Delaware and Nevada incorporation. It doesn't always have to be the state you reside in. So there's some tax advantage to a Delaware LLC, for example, and Stripe will set that up for you. I've used LegalZoom, which I do not recommend. It's an absolute nightmare. It's caused me nothing but headaches in the past to do it through LegalZoom. Same thing for filing my copyrights and trademarks. My trademarks especially, that was a nightmare through LegalZoom, so I do not recommend it. Easiest way, but most complicated and frustrating way, but easiest and cheapest, depending, and I say complicated and frustrated because the website will look like something from 1996, is to do it with your Secretary of State wherever you live. Okay, so depending on where you live, it could be relatively cheap, much cheaper usually, because when you use a service like LegalZoom, Zen Business, Stripe, whoever, they have to pay the state fees plus their own fees for them to be profitable. So you always pay more. It's cheaper to do it yourself through the Secretary of State, through your local government website. So you want to do that. And so once you have your LLC, you can get your business bank account and your EIN number. And I would say if you're confident that you're going to make money and that you're going to monetize through some method other than the YouTube Partner Program, if you intend to monetize through some method other than YouTube Partner Program, you are going to know that you're going to write and sell books, or you know that you're going to do affiliate links with Amazon or the Amazon affiliate program called Amazon Influencer. Now, back in my day, they called it the Amazon affiliate program. Now it's the Amazon Influencer program because everyone's an influencer. So if you're doing that, then yes, if you're going to monetize and you know that's going to be something other than YouTube Partner Program, you know you're going to do Patreon, you know you're going to do donations, you know that you're going to sell a digital product, you know that you're going to do affiliate marketing with Amazon or something else. You know that you're going to start from the beginning with designing merch, not with your logo on it, but something cool for your audience that you're going to sell. Watch our merch workshop. That's very helpful to understand what will and won't sell and how to design things for your audience instead of putting your logo on it. So if you know you're going to monetize and you know in the first 100 days you have a plan to start making more than $600 in your first 100 days, I would highly recommend starting the business account and the LLC anyway. And you don't necessarily need that to start to try to also take deductions on things, but it does make it easier. It does make it easier when money going out starts going out from that business bank account. It does make it easier to benefit from it, and it does set you up long term. It also eliminates bad habits. Another thing you can do as an intermediate step is you could get what's called a DBA, a doing business as. And a DBA is going to be cheaper than forming an LLC by far. And an LLC is not going to be that expensive. An LLC and formulating an LLC is probably going to cost you about $250 in most states or less. And that's if you expedite it. It can be cheaper. It could be like $150. A DBA is going to be much cheaper. And a DBA is a doing business as. It allows you to do business under basically a stage name or a nickname. So this could also be a benefit for those of you who want to maintain your anonymity even when doing business and doing things anonymously. So you can take money and receive checks and payment under your stage name, your nickname, your avatar, that sort of thing. So look into getting a DBA, potentially a doing business as, and then getting a bank account associated with that. And that might be cheaper, and that might be an easier way for some of you to start. It also helps you with your anonymity if you want to, maintain some level of privacy. I also recommend that if you can afford it and you have the extra dollars, get a USPS or UPS address. And the reason why is you want to use this for your incorporation documents, and you want to use the physical address for those things. You'll get a PO box, but use the physical address for the post office or USPS from that for filing and incorporating your business, because then it makes it, for your protection and privacy, so it's not registered under your home address. You don't want to do that. The other thing you want to do is not go and shoot your mouth off and tell everybody what your LLC is. And you want to name it something that kind of also can be a hedge for anonymity and keeping your privacy, and you want it to be something that sounds professional. This is also a reason some people have multiple LLCs, because then they can have like a parent company that owns the other company. And these are, again, for obfuscating for privacy purposes, so that, you can maintain your anonymity, your privacy. People don't have to know where you are, that sort of thing. This is the other reason people also incorporate out of state. So again, there are reasons to do these things a specific way. Depends on what you care about and what your privacy and security concerns may look like. The other thing you want to do is, if you're making enough money, consider getting a WeWork and just putting it through that. You'll also want to use that if you haven't signed up for the YouTube Partner Program already. If you have these things set up and in place and you're incorporated somewhere else and so on and so forth, you can use a different address for the YouTube Partner Program. And in theory, if you are setting that up, you set up this stuff for your YouTube account, you can basically make sure that when people file a copyright claim notice, that they aren't able to dox you and aren't able to get your private information. A lot of content creators don't fight and do counterclaims on copyright, because to do so, they have to disclose the information and the address tied to their partner information. And if they didn't do it as a business entity, that reveals their personal address, information, legal name, phone number, so on and so forth. By having these things in place early and being a separate legal entity, it gives you that added layer of personal protection. So that's something to be aware of. And so that's extraordinarily helpful in a lot of cases for people. So if you're wondering, like, okay, I'm not making any money, why would I do any of these things? These are the reasons why, even if you're not making money, in the long run, you might want to do these things and set them up beforehand. And this is why. This is exactly why. So it just depends on how seriously you're willing to take all of this and what concerns you have going into this. And this is why someone would take these extra seemingly paranoid steps towards like, oh, well, I'm not making any money. Well, what if you are? What if you go viral? Or what if you blow up? So the other thing I will tell you is do not set your YouTube account for YouTube Partner Program up while you're in another country on vacation. Horrible stories of people who've done that and then had problem getting their money later. And yeah, you don't want to do that. Wait till you're at home in your home country, in your home state, and don't get excited. Oh, I can qualify for the YouTube Partner Program. I'm going to apply now. Do not do it while you're on vacation. Do it at home. Do it at home. Do not. I swear to you, it'll be nothing but nightmares and headaches, and you can lose thousands upon thousands of dollars. So, yeah. So that's a whole thing. So anyway, I hope this answers your question, Lois. Thank you, Kansas City Coins, for the $1 super chat. And our good friend, the lead attorney, thank you so much and everything. Really enjoyed having you on the coaching call the other day. Can't wait to get together here. We're both in Atlanta and everything like that. Always appreciate you supporting me, lead. Appreciate you. And thank you, Lois, for a super sticker. Appreciate that. So let's see. I think that is the super chat questions. So now we'll just go back to the live chat. We got plenty of you here. I see our good friend Malevolent Elephant is in the house. Thank you, Geekdom, for promoting this. Appreciate you, buddy. We got Jessica. We got Sladro. We got Shark Scrapper. Charles Moreland says, I'm used to speaking to an audience from my military experience. So what format would apply? I think you can use all formats from that. My father was a Marine, actually. My father was a Marine. He was an E9 Master Gunnery Sergeant. Came up through the motor pool from nothing. Joined right after he graduated from high school a year early, mind you, as an immigrant in this country. Came here as a teenager. And so my father was in the military, and I've talked to him a lot about his military experience. He's told me the war stories and all that stuff. That stuff is fascinating. Okay. So I would tell you that for live streams, I would use a storytelling format where I would, for live streams, either talk to soldiers about what they can expect if they're enlisted and tell them about some of the realities and kind of set up with a frame of, oh, we're going to talk about what to do when you ETS out. We're going to talk about what you have to do when you're in the field. We're going to have to talk about choosing your MOS. We're going to talk about trying to haggle for the duty station you want. We're going to talk about this, or we're going to, so it just depends. It just depends on what your experience is, and you can pick and choose a lot of nuggets for that. And I would live stream for some of that to have a real connection with your community, do Q&A. You can then take those live streams. You can use OpusClip, our sponsor, and you can have it do the AI, cut down those live streams, repurpose them. Now you have YouTube Shorts. Now you did a live stream. You did a bunch of war stories, a bunch of Q&A. You can find nuggets out of that for the AI through OpusClip. Then make those YouTube Shorts, schedule and repurpose them, put out 1 to 3 of those a day. Then you can also run up the channel that way. You can also make clips from OpusClip for 3 to 5 minute clips that might just be good videos on demand. And then also for military experience and talking things, I would say that you can make some videos on demand. I would even consider things like where you maybe go and you do a walk and talk around in the woods. And then that's a more interesting dynamic thing than just sitting down per se. So there's a lot of things you could do format wise as somebody, well, I don't know whether you're still enlisted or whether you're a veteran, but also thank you for your service. And I would say that Charles, could easily be a really interesting and dynamic way to approach content creation for your audience. And so I would just try to figure out for you, Charles, more of what you feel your audience avatar. Is it people enlisting to the military? Is it people who just want to hear what it's like and hear the war stories and be entertained? Is it a combination of? So I would figure out who your audience is. Do you have more than one audience? Who do you want your audience to be? That sort of thing. It's a good question, though. I did like that question. something a little different. Do I have a video on brand deals already? Several. We even have several live streams on brand deals, and we will have more. And we will have more. Sister Kamala asked, do brand deals work for faceless channels? If so, how would a faceless channel promote a brand? It's actually not that difficult. Plenty of faceless channels do brand deals all the time. The original faceless channels of YouTube are nothing new. The original faceless channels of YouTube were video essay channels, like the Nerd Writer, for example. The original faceless channels have been some of the movie review and television review channels that never show their face. And a lot of gaming channels and gaming streamers have been faceless and never revealed their face. And they've all done brand deals. All they do is do the sponsor plug for the brand deal. They use sometimes footage supplied by the brand, or they'll use B-roll, or they'll just talk out loud and they'll have the graphics for the brand with some animation or something going on behind it. It's actually very straightforward and very simple. The only thing that you need is to have alignment between the audience, the brand, and the creator. And then the execution of the promo is usually up to the creator and then approved by the brand. You should have more creative control. So if you're a faceless channel, you should be able to show them, here's what I want to do for you. The main thing is to get approval on the script for the ad read. So you get approval on the script for the ad read. I would probably make a segment for it that is separate from the video itself, so it can be an insert. Get approval on that, and then you can pretty much make the video however the hell you want, because they're approving their part of the video. They're approving the concept of the video, so that's not something that they don't want to be a part of. And then that allows you to have all the creative control you want, because you allowed them their input only on the ad read. You allowed them to approve the script, so it's something that they're okay and comfortable with you reading. And then you told them and you approved where in the video it's going. You told them the general outline of your video and what it's about. They don't necessarily need the script of your video, and that's that. And then, boom, whether you're a faceless channel or whether you're an on-camera personality, this still works and this strategy still works. This is why people do one-on-one coaching with me for brand deals, is to learn this process and learn how to do it, learn how to negotiate it, get the creative control, haggle for the negotiation on the price, and also how to structure it. The other reason you want to structure the video ad insert this way is that if the contract's over and you don't have an ongoing relationship with the brand, in theory, if the video is still getting views, you could always say, well, if I'm not doing licensing or a continued relationship, I can always remove this ad insert later on this video. Why would they get free traffic forever if the period is up? If it's the 6-month agreement or 3-month agreement or 12-month agreement of how long the ad and the video needs to be up, and it's exceeded that time, you can always cut it out if you don't have an ongoing relationship or you haven't negotiated additional licensing, because otherwise they're getting free traffic forever from a video because they know you won't take the video down. But in the YouTube editor, you can edit things out, and you could always edit out an ad cert if it's been more than a year and the contract is up and they're just getting free money, free traffic off of it, and you're not at least getting an affiliate link out of it. Why keep giving them traffic for free forever if they're not doing deals with you now? If you don't have a relationship now, why should they benefit from a relationship that no longer exists? Now, you don't have to be mean about it, and you can talk to them about it, and they might be willing to do something and do another deal or renew or something like that, and then it's a value add to keep that thing in place. But if not, if you create the ad, whether you're faceless or on camera, appropriately, it's something you can easily edit out without affecting the rest of the video after the terms of the contract are fulfilled and over with, if you're not going to keep the relationship going. You can kind of think of it like, hey, we broke up, I'm taking my stuff back. So that's again, this is the kind of stuff that I teach creators, whether they're in the Awesome Creator Academy Pro group. You can go to awesomecreatoracademy.com if you want to check that out, or if they work with me one-on-one, we figure out, well, all right, how are you building your long-term brand relationships? How are you building the ad formats for leverage? Hey, did you set an alarm reminder for when the contract is up so that you can try and go to a renewal, or that you can get more licensing, or that there's some other value add on the table? What's that? Hey, why are you only a sponsor with them and not double dipping and getting an affiliate link? Are you tracking everything? so that you have clear data? Do you have a data transparency arrangement with a brand so that you know when you're converting for them, and you know that you made them money, and you know that you drove traffic to their website, so that you can prove that you're worth it, so that you're not haggling on views being up and down, but you're haggling on the value you actually created for them? This is stuff nobody thinks about. This is stuff nobody teaches. This is stuff nobody talks about, like, because it's not the fun, sexy, ooh, look at me, I got my first brand deal, and look at all the funny goodies they sent me in my haul video. That's like the only brand deal stuff that anyone watches, is a lot of cutesy influencers that can't even disclose like how much they made or what the contract was. It's just, oh yeah, and when you go to brands, do this or do that and everything. It's all this cutesy crap. It's all this fluff. And it gets hundreds of thousands of views, just like the, oh, I got my first YouTube paycheck videos. It gets thousands of views. And it gives you no substance. It gives you no substance. It gives you no strategy. It gives you no actual real like value that is worth money, in terms of it's going to save you money in the long run by mitigating your risk, give you upside or leverage to work with the brand, or give you a basis for saying, I have a way to tack on fees that are completely justifiable and I'm not getting screwed over. So again, that's why I teach what I teach. And a lot of people debate the value of, oh, like, you don't have 1 million subscribers, you don't get 1 million views a month, why would I learn from you? It's like, well, because I make more than people who do that while getting less views than them, because I understand my leverage, because I also understand UGC creation, and that you can create value for a brand and it not have to live on your channel. You can even do stuff that lives on their channel. You can always do NLI, and you can license your name, image, and likeness. Now, if you're a faceless channel, you can't license your name, image, and likeness. That's the value of being a face and working with a brand, is that you could become the face of the brand. And then it doesn't matter how well your YouTube channel is doing, because you're representing the audience, and you're now the representation and relatability of the audience, because you're a customer success story, because you are now the embodiment of weight loss, or the embodiment of, fat loss, going from fat to fit. You're the embodiment of what a pro gamer is. Because like maybe your gaming channel isn't popping like it used to, but you're still winning at the tournaments and you're still climbing the ladder. And it doesn't matter that your channel's not popping, because you're a world championship gamer and you're leveraging your name, image, and likeness and that brand for the company that you're working with. Or maybe you're not crushing it on your YouTube side anymore, but you're crushing it in the world of business, and you're not worried about your YouTube channel because now you're making 7 figures, and now that's the success story, and that's what matters. So there's these ways to look at the benefits of a faceless channel and the leverage that you have there with anonymity. You have, maybe less vulnerable to cancel culture, those things. But on the other hand, if you are a face, you have more UGC opportunities, you have NLI opportunities, and there's also the deeper potential for a connection to an audience, which might make the ability to sell certain things a little easier. You're more credible, you're more accountable. It might feel more authentic to some people. You still can win as a faceless channel, not taking away from that. There's different plays to make there. You can definitely do brand deals. You just don't have as many options for UGC or NLI if you're faceless. That's the main component. And again, I doubt most of you, when you've looked at videos about brand deals, I thought almost no one's probably talking about UGC. Almost no one's talking about NIL. No one's talking about name, image, likeness, and licensing. No one's talking about UGC and doing work for the brand. There's so much upside in doing work for the brand and not having to worry about your own views, follower counts, subscriber counts, any of that. Just being either one, a great producer, great production values, great camera work, or being great representation for the brand. Those plays mean that even as a small creator, that you can be the right fit. They have to hire a model anyway. One of my best friends works in doing both modeling and acting as a working actor and a model. Actually, several of my friends, but my best friend is who I'm talking about. And I've worked with him for years. And in fact, I was like his photographer and videographer for his sides and for his portfolio. I even helped him build his portfolio website. And he would help me a little bit behind the scenes when my early days, when I needed an extra hand to shoot something for like, doing an unboxing video. I wanted another angle. I wanted some handheld footage, something like that. He'd help me out. So we'd help each other when we lived in the same town. So anyway, my best friend, what he would do is he'd do things like print ads, right? He'd be a model in a print ad. Sometimes they don't even run the ad, or they didn't use his photos for the shot, but he'd get a day rate, and he'd make like $500, $800 for the shoot just to be the model. No reading lines, not even video for this, just for the photo shoot, just to be the model. Y'all do not understand when you're doing these lowball brand deals that on the UGC side, that they always need talent, they always need photographers, they always need videographers, they always need video editors, and they pay all of those people a price and a day rate. And the thing is, if a model who's not even doing lines can get a $500, $800 day rate, and they're not even used, but they have the license to use that person for up to 6 months in a campaign that they may or may not even run, how are you doing lowball deals and not even getting that? And you're doing the video, you're the face of the video, you're reading the lines, you're doing the editing, you're doing the production, you're doing the research, you're doing the script writing, and you're giving them access to your audience, but you're going to do these lowball deals. Think about it. If you were just a freelance photographer on the shoot, you'd make more money than some of y'all are charging for brand deals. If y'all were just the editor, you'd make more money than y'all are making on the brand deals. That's what y'all don't understand about the UGC side. The UGC side is where the money's made, and it doesn't matter how big your audience is if you're the right look, the right voice, the right story. Because the model or the actor or actress in that ad is just the right look, the right face, and the right story. And the story might even be made up. It might not even be the real story. There's the right look and the right face and the right voice. And that's it. And you could be all of those things and more to a brand. And that's why the benefit of UGC. And UGC, by the way, stands for user-generated content. So the thing is, there's power in that. And you don't have to be a huge influencer. You just have to be the right fit. You have to be the right market fit. That's what that is. And the brand has to know who the hell you are. And you don't need to be huge for that. There's other ways. And it's being a cheerleader for the brand helps considerably. And also having above average production values and editing. And also, a little pretty privilege wouldn't hurt you. But like in some cases, again, be the right fit. So, that's what I would say about some of that stuff with brand deals that you guys may not have heard or may not understand. Let's see. We have an editing question. So this is from LinkedIn. I love these questions. This is also why I love multi-string to LinkedIn. Shout out to our friends over at Streamyard for that, and to our friends OpusClip for the repurposing side. But Juan Camilo Rosa Jimenez. Love that. So Juan asks, I have 7+ years of video experience. Do you advise me to reach out to cold leads, or is it better to build a stronger presence online and then reach out to them? I actually don't even believe that for a video editor, you should be doing cold leads and doing reach out. And it's actually really annoying to content creators. What I would do is I would become part of, I would make a list of the creators I want to work with. Once again, Dream 100 list. Once again, I learned this from, God, why am I spacing on his name? Russell Brunson, right? I learned the Dream 100 list idea from Russell Brunson, then I made it my own, and then I literally incorporated it into every area of my life. So I took it to the extreme. I learned it from him, made it my own, took it to the extreme. So Dream 100 list. I would write down 100 of the clients that I would want to work with in terms of like influencers or brands that I want to do videoing with. Make a Dream 100 list again. Then I would tell myself, well, why do I want to work with them? And then also, what are the downsides to potentially working with these people? So I have clear eyes going into it, and then figure out whether this makes them a hell yeah or a hell no. So then I figure that out. Then instead of reaching out to them directly, I start becoming part of their community and make sure they know exactly who the hell I am, because my outreach is not going to be cold. I'm going to be warm. If I can't be like, I'm going to be warm if I can't be hot. Okay, I'm going to be at least lukewarm if I can't be scorching hot. Okay, so you don't want to do cold leads. You want hot leads. And if you can't do hot leads, you at least got to be room temperature or lukewarm, my friend, not cold. Okay, so you want them to know who you are. Be an active part of their community and fan base, and be somebody who's genuinely invested in them. And then that's where this hell yeah, hell no thing comes in, is if you cannot be sincere and strategic, don't bother. If you cannot be sincere in wanting to see the creator do better, if you are not sincerely invested in their brand, if you are not aligned morally, ethically to their brand. It's not worth being bothered. It's not right for them. It's not right for you. You're going to be at odds with your client if that's the case. You should absolutely be in full alignment. That's why this Dream 100 list will very rapidly get cut in half if it's not cut down by 2/3 to a remaining third, which then makes it reasonable. Okay. So then you're going to follow these people. You're going to be invested in their brand. You're going to be invested in their community. People are going to advocate for you, and somebody might be able to make an intro directly. And so now it's not cold. They know who you are. Someone else in their community knows who they are. Someone's vouching for you. And then instead of beating down their front door, you're being walked in the back. This is a networking strategy, by the way, that applies beyond getting clients for YouTube. It applies to clients in freelancing. It applies to getting job opportunities now in corporate. LinkedIn did a case study. 80% of all opportunities are in-network opportunities. They're not even publicly advertised most of the time. And even when they are, it doesn't go to someone who came through the front door, through the public. It's someone who has walked in the back through having someone vouch for them. Nepotism and networking is a real thing, and it is a skill. And believe it or not, nepotism isn't always unearned. Nepotism is relationship-based. Anyone here ever think about relationships? Aren't they hard to maintain and hard to get a lot of the times? So if you have a relationship, that doesn't mean that just because you're related to somebody or you know somebody or you have them in your network or whatever, doesn't mean they're going to vouch for you. Doesn't mean they hold you in high regard and esteem. Doesn't mean they will put their neck out for you. So if you're the beneficiary of nepotism, even when it's family, by the way, a lot of times there's a reason why, because every one of us has a family member that we will not put our neck out for. Every single one of us has someone like that we will not put our neck out for. Every single one of us has an old childhood friend we would not vouch for, not put our neck out for. Everyone has somebody in their network that they're like, man, I don't even know why you here sometimes. So don't think that nepotism is purely negative or purely arbitrary. Sometimes it is actually something that you have to earn, maintain, and justify if you want people to vouch for you. So you have to do the work to be a beneficiary of nepotism and put yourself in that position. And I just told you exactly how to do it. So the thing is, yeah, you have 7 years of video editing experience. How many of those 7 years did you spend building and cultivating a network that can leverage your relationships and can vouch for that 7 years of work? How much time, how many network contacts, how many people that are crushing it themselves and ambitious? How many out of that 7 years that you spent video editing, how many of that 7 years did you build networking relationships with people that are close to high value clients that absolutely can afford to pay you what you're worth? That's something to consider. That's why sometimes 7 years doesn't cut for success. You need another 3 because you spent 7 years getting the skills, 7 years being a practitioner, and 0 years networking. So we have to build the networking chops up. And the network is not fellow video editors, by the way. The network's not fellow video editors. However, the network could be. If you're a video editor, the network could be. You might want to talk to people who are doing thumbnail design. You might want to talk to people who are researchers. You might want to talk to people who are strategists. You might want to talk to people who are coaches and consultants who have clients that need a better editor or need a good editor or don't have one. So if you're a video editor, your best friend is probably going to be social media coaches and consultants, because then they're going to be able, and you want to set up a referral business. You want to set up a referral business where you charge what you're worth, but you pay out to people who refer you to paying clients and you give them a bounty. You know, it could be a flat rate or it could be a percentage. Now there's an incentive for somebody to refer people to you. So there is an option there. So that's another way. So like I said, then it's not cold leads. It's someone vouching for you. It's being walked through the back door. It's being given. By the way, this applies to everything besides being a video editor. This applies to how you can get brand deals is through networking. You have friends I have friends bring me brand deals all the time. I also refer, every time I get a brand deal, I refer 3 other people, if not 5. I always refer 3 to 5 other people, usually a small creator that nobody has heard of, a female creator in my network, and then also somebody who is an established creator that absolutely can deliver and will make me look good. So those are usually my 3 go-tos. And then beyond that, sometimes then it's just 2 other people that I know could make me look good, and I'll refer them. And so a lot of times what I'll do is I'll tell them, hey, can't guarantee it. I'll text them, DM them, call them and say, hey, can't guarantee it. Be on the lookout for such and such a brand potentially to reach out to you. If you're not already following them, make sure you're following them, make sure you're interacting with their stuff and everything. I put you on their radar. So make sure that you're aware of that and that you're, keeping things locked down, keeping your nose clean, all those things, right? So you want to have relationships with people who would be willing to do that sort of thing for you and to vouch for you. And like I said, this applies to brand deals and sponsorships. This applies to freelancing and clients. This applies to your regular traditional work career and building that up. This applies to consulting. This is literally everything. This is how networking and nepotism benefit you. This is how you put yourself in position to benefit. And this is also how, by the way, by paying it forward and being a referral for other people and giving other people opportunity, that's where you create your karma bank. That's where you create reciprocity. That's why you will never have the imposter syndrome of, oh, am I a good person? Do I look out for people? Oh, who's got my back or whatever? You'll know that you have those good things coming to you because of how you're operating. So, and this is also why it's important to, when you make your list of all your Dream 100 lists, this is also why you list the pros and cons and do the hell yeah or hell no on how aligned you are on values too. Because you want people who share your values to be the people that you hit up. You want people who share your values to hit you up and refer you, and you want to know you're aligned there. You don't want there to be any hesitation on either side, and you definitely don't want to work with brands you're not aligned with. So that's why this is extremely important. This is also why, in addition to your audience avatar and your niche, when you're building those things out, I tell everybody, you got to figure out at least 3 of your values that you absolutely stand for. And you also have to figure out what your red flags are. You have to figure out the things you cannot stand, the things you don't like, the things you don't want to stand for, the things you don't want to be associated with, because it makes every business decision easier. It makes every networking relationship easier when you know what your boundaries look like. So again, extremely long and convoluted answer, but you know me, that's how we do here. You're going to get complete answers. Shark Scrapper says that if you happen to be in Florida, you can set up a business online with Florida Department of State, and that the cost is about $140, so not too expensive. Don't forget to also register with the IRS and decide how you want to be taxed. Right. That's why we do the S Corp declaration as well sometimes. And because again, it depends on how you want to set yourself up. You might want to set yourself up to be paid on a W-2 schedule from your own company and go into a lower tax bracket by doing that, and then take the rest as distribution so that you get the full income, but it's split up so it's taxed at lower rates instead of at the higher bracket with the progressive tax bracket. And again, that's all legal. Talk to your accountant, talk to your lawyers, talk to your bookkeepers. This is just a YouTuber telling you, but this is the tax advantaged strategy and the tax advantage situation that people are referring to when they talk about incorporating your business and your brand. And again, like I said, what you want to do is don't think of this as you're getting an LLC or incorporating your YouTube channel. You need to stop thinking like that. You need to think about this. Oh, and stop thinking yourself as a YouTuber. You're a content creator. And as a content creator, you are the owner of an independent media company. You are the small mom and pop shop compared to the big media corpos, okay? You have the big media corpos, and they would be the equivalent of your big chain brand like restaurants, and you're the small family-owned mom and pop shop, okay? So you are a media company. That is the services that you provide, okay? You're a media company. Those are the services you provide. That is the value that you create. And one of the assets of your media company that is an LLC is your social media portfolio, where you distribute your content as a media company. You are a media company that owns intellectual property, and you are using these online content platforms for hosting and distribution, nothing more. They are glorified web hosting companies with a media buying, ad sharing model built in for you. That is the exchange of your value. That is, you are now a B2B with them. You're in a B2B, business to business relationship. Okay? So you're not merely a consumer. You're not merely a customer. You're in a B2B relationship. That's why these things are called partner programs. You're in a B2B relationship. So you are an independent media company. Okay? You're an independent media producer. You're an independent journalist, whatever it is. You're an independent media producer. Your content is yours. You own the intellectual property. You are in an agreement for non-exclusive licensing and distribution with these social media platforms, whether it's YouTube, Twitch, Instagram, TikTok, what have you. Okay? They're hosting and distributing your platform, your content across their platforms. And the exchange of value is the potential for a revenue sharing partnership on ad revenue and subscription-based revenue and on donations. That's typically how it works. And you have the rights to your sponsorship income that you're brokering based on your reputation, reach, proof of revenue generation, revenue generation, and your reputation and representation for the brand. And so those are the things that are valued in the sponsorship relationship. And so when you build your media company and you have your LLC, when you have your corporation, you are a B2B entity entering into an agreement with these web hosting companies, which we call social networks. And they're just a glorified web hosting company. They're a glorified .com that also gives you a revenue share opportunity. Nothing more. If you're glorifying the platforms, building your identity on there, you're nothing more than a digital sharecropper at that point. So that's why what I recommend is you think of yourself as a media company. You think of your content as intellectual property and assets. And that's why you also need to all build your own product. You can start with merchandise, okay? And that's yours and you own that IP. It's merchandise. Now, if you are doing something like anime or gaming, you can't use the characters unless you get a license. So you have to figure out something culturally relevant. Maybe it's a slogan, a phrase, and it's graffiti or something. If you're an anime person, do graffiti and use Japanese words like senpai, but it's in graffiti or something like that. Or yandere, but it's in graffiti. And then it's cool and it's dope and it doesn't matter and you don't have to use a character and it's culture. So now you're selling culture instead of character or instead of your logo. All right. That's why I do the creator hats. It's culture. All right. You can do a book if you're, so inclined and if it fits your brand. Even if you cover other people's IP, if you can get enough love and support for your own thing, you want to write your own fantasy novel, you want to do your own comic book series, someone will buy that in your graphic novels. Okay, cool. Your original character stuff, whatever. So you figure out a product. If you don't figure out a product that you own 100% of, you're just a digital sharecropper on these platforms and they'll giveth and they'll taketh away whenever they want. So I highly encourage you to think of yourself as a business. The IRS is going to tax you like you're one. So think of yourself as a business. The IRS is going to tax you like you're one. Set up yourself. Think of yourself as a media company, not as a YouTuber, not as a TikToker, not as a Twitch streamer. Think of yourself as a content creator and a media company. Your content is your intellectual property. Start thinking about that. If it's possible, find things you can trademark so that you, just like the brands, you're playing that same game. All right. Make your own products, physical and or digital. Sell directly to your audience. Stop being a coward and worried about being called a sellout. Start selling to your audience if they want to support you. Okay. Go ahead and do that directly. Super chats, super stickers, super thanks are great. You split it 70-30 with YouTube, 50-50 most of the time with Twitch, 60-40, I believe, with TikTok. And what did they do? They're not that much more than a glorified payment processor for that particular feature. If you just literally popped the thing on screen and took the money through PayPal, you'd keep 98% of the money. You still have to use PayPal though. That's my little joke there. So it's like, one day, hopefully Streamyard will start letting you do payments, whether you're a big creator or not. And then you maybe keep more of your money that way in terms of donations. So, shout out to Streamyard again. So, like I said, you're giving up 30%, 40%, 50% of your revenue when you get donations for very little in return. By the way, thank you for sending the super chats. Keep sending the super chats. In my case, I make money on the back end and other things to where giving up 30% to YouTube for the convenience of you doing things the way you want to is fine with me. But for you, maybe that 30% means a lot more. If you're on Twitch, that 50% daggone sure means a lot more. So consider that. I think you need a product, whether it's physical merchandise, a book, a digital product, your own membership besides a Patreon or whatever. Patreon's not that bad, but you don't control a lot, and they can kick you too. Again, I host my stuff with Kajabi. Shout out to Kajabi, my new partner. Been using them for 6 years, and now we're partnered. So yeah, I recommend having your own thing and not being a digital sharecropper and giving up tens of percentages of equity in your brand for no assurances whatsoever, and they can give it and take it away whenever they want. So that's why, I'm about that. And that's why I teach you guys the things I teach you. And I don't just teach you, how to grow an audience, how to get views, how to get subs. It's like, no, I want you to be independent, and I want you to eventually build something where you can migrate your audience, and where platform, give it, take it away, censorship, whatever it is, that you still have a means of income and you don't feel like you were just fired out of nowhere. Again, you're not an employee. You don't even have employee protections in most of these cases. So to be very serious and blunt with you, it is important to build your own thing and have the leverage. That's why I build the newsletter. That's why, again, I encourage all of you, you will get on my newsletter with this, but I encourage all of you to get our 12-week creator guide. That's something I give you guys for free, but also put you on my newsletter. It means I can reach you. You can hear from me. We can maintain our relationship outside of these platforms and without the algorithm getting in the way. And, I have the freedom to talk to you as I please if I have access to you and if I have your email to contact you. So that's the difference. Don't be beholden to the platforms. Use them to your advantage, but don't be used by them. Have a partnership, have exchange, have leverage, have an exit strategy, have a way to walk away and say, if they change, if they're altering the deal, and I have to pray they don't alter it any further. If I have to worry about them altering the deal like a Sith Lord, then I need a backup plan. I need a contingency of my own. I need some leverage. Okay, I need that. I need a contingency plan. I need to be thinking like Lando here. I need a backup plan. So your email list, your own product, your own website is your leverage. Eventually, if you're doing things, again, and this could work whether you're an entertainer or an educator, if you play your cards right, if you think strategically. This is why I help people one-on-one. This is why they come to me for coaching. We develop strategies, not just for growth. We develop strategies for the business side, and we develop exit strategies for what if something goes wrong with our platform. The reason that I talk so much about growing an email list is you guys may not realize this. If you had a 30,000 email list with over a 50% open rate, you could be getting 5,000 or more per month for sponsorship just of your newsletter and not even need your YouTube channel. You could be making 5,000 a month from just your newsletter if you had 30,000 people on your newsletter and a 50% open rate. If you had that, you can get $5,000 a month in sponsorship consistently for access to your newsletter with a brand. And then you'd be making $60,000 a year without even using your YouTube channel, your TikTok, your Twitch stream, or your Instagram. Now imagine you got that thing bigger. Imagine instead of just 100,000 subscribers on YouTube, you had 100,000 subscribers on your email list. At that point, you have a $10,000 to $20,000 a month email list now before you even sell a product with the brands. And if you have that, you probably have one of the biggest email lists in your niche. 30 to 50,000 is considered some of the biggest in a niche. If you can do that. That's how valuable email lists are. No algorithm, that's why. Think about that. Think about the leverage of, wait a minute, I can have direct relationships with the brand, not split any money, keep all of it, own the relationship, no algorithm way, nobody censoring me. And also I could make 6 figures. That's why we grow our email list. That's why when we get all this traffic to TikTok.com, YouTube.com, Instagram.com, Twitch.com, whatever it is, it's important when we siphon off 10 to 30% of that traffic at some point in the relationship, or 10 to 30% of our overall aggregate followers or subs, and bring them to our own email list and our own website and consolidate a strong fan base there. Also get 1,000 true fans that'll directly support us with our wallet, directly. It's important to do that. And the reason is you get all the control, you get the relationship with the audience, you have your super fans, you have your core support, and it's a lot harder to take any of it away from you and to lose what you built. If you're only on social media, you're a digital sharecropper, and they can decide to cut you out at their leisure. So that's kind of Roberto's big lecture on that one. That's kind of Roberto's big thesis here. So let's see. We have a little bit here about membership. So Speak Spanish Now, thank you for the $5 super chat. So Speak Spanish Now says, When is a great time to start a YouTube membership or Patreon to hold classes? I gained 700 subs in the last 2 weeks. Congratulations. Ready to have weekly and monthly classes. So it depends on what you want to do, and it depends on how much upfront money that you have. Because if you have $0 upfront, you would do it with Patreon, I think, rather than just YouTube. Because if you do with YouTube, like I said, the downside, it might be convenient for the audience, so you might get more people signing up, but you're losing 30% of your revenue up front. If you do Patreon, you're losing 8 to 12%, which is not nearly as bad. However, if you pay up front for something like Kajabi, which I use, and yes, they are a partner, they're a sponsor and an affiliate. If you do something like Kajabi, yes, you pay money up front, but if you go on your free trial, you can either pre-sell, or you can build the thing very quickly and start selling right away and know that you're going to make the money to recoup the cost. And if you pay up front, the thing is you pay up front, but forever you're keeping all the other money. So let's say you end up paying, like, if you can figure out, okay, I'm going to pay $200 a month, $2,000 a year, but you figure out how to make $100,000 a year. It means that's 2% of your overall revenue. Let's say you go from $100,000 a year to $300,000 a year. The price didn't change. They're not increasing the percentage that they take from you because it's a flat fee. It's not a percentage. Now, if this was YouTube and you're making $100,000 a year, you're giving $30,000 to YouTube, and then what's left is yours. But, oh, by the way, the IRS is going to tax it. So you're going to lose that on the IRS. You're going to pay 15% in self-employment tax. So you already know you're going to lose a significant amount of money after already losing 30%. So by the time it's all said and done, you're going to be left with maybe, if you're lucky, 40% of the original value that you generated. That's not fun. So on the membership side with YouTube, if you want to build a membership as an educator, not as big of a fan of that going that way for teaching your classes if you're in an education style niche. Now, you're in a language learning niche. I would definitely consider building your own platform here. Second best option would be Patreon, because at least with Patreon, let's say you're making $100,000 a year, you're probably giving up like 10%. So you keep 90. Oh, that increases. You're making 300,000. Okay. At that point, out of the 300,000, at 10%, you're giving up, 30, which still sucks, but it's there. Okay, fine. But here's the thing. Like I said, if you're then on Kajabi instead, yes, you pay up front, but your fixed cost now instead of giving up a percentage. I'd rather give up the flat fees. It's more painful at the beginning, but I'm paying money on the seed and not the tree. Think about it. I'm paying money on the seed and not the tree. So the thing is, if I use revenue sharing with a platform, sure, I pay no upfront cost. Oh, this is fantastic. Until the thing bloody grows. And then when the thing grows, I'm giving up tens of thousands of dollars of my money. And then I'm giving it up on taxes on the back end after giving it up. Then it's and it sucks. Okay, at that point, that really sucks. So I'd rather pay up front and say, okay, I'm paying my money for the seed and I'm not sharing the fruit from the tree. I would rather pay for the seed and not share the fruit from the tree. That's my model on this. Now, if you are absolutely broke and you're not making money, that's where they get you and they say, hey, zero cost up front, zero cost to get started, but we're going to share the fruit from the tree together. And that's the deal. And the thing is, if that's the only deal you can get at the time and it makes sense for you, that's fine. But why do people not then change things up later? Because once you have the audience, once you have the subscribers, once you have people paying, it's hard to change the system that you brought them into, and it's hard to get them to learn to use something new. And so by that point, you're also comfortable. And so then you pay a convenience fee for the comfort. You keep paying over and over because you and your audience got really comfortable and really used to something, and it's hard to change. And so that's how these things make their money. And so once you understand that, then you understand why someone like me just pays for the seed so I can own the tree and the fruit it comes from. That's why I pay for my services up front, because I am not going to split what I grew. I already made that mistake when I went into a multi-channel network when I was a small content creator, and they actually exploit you back then, where it's like oh yeah, we're going to help you grow. No, they don't. Oh, but hey, we're going to take some of your AdSense. Yes, they will. So, yeah. That's why I don't do multi-channel networks. That's why I don't believe in MCNs. Are there a couple of good ones out there? Sure, but the majority of them are not and haven't been. That's why they're going away. That's why they're going out of business. That's why you see so many lawsuits from them, like what happened with Defy Media, and how like MatPat and people like my friend Chad Wildclay had to, go up against them and expose them to be able to get the money that they were owed. I ended up in MCN where it took me 3 years to collect $4,000 in back pay they owed me. It was a nightmare. So this is why, again, I would rather pay up front for the seed, own the tree and the fruit that it comes from, than split the bounty of the tree that I grew myself because I didn't want to pay for the seeds. So that's why I do that. Now, as for when's a great time, here's the thing. If you're an educator, it's a great time as long as you have even like a couple hundred people following you, watching you, subscribe to you, because at that point, if it's a couple hundred people, and let's say you even get like 5% of them on board, let's say you got 1,000 subscribers, and out of that 1,000 subscribers, you got like 5% of those people. What's that? Like 50 people, right? It's 50 people. Let's say you got them onto a membership and you own the membership platform, right? And they're all paying you $29 because you said, hey, I guarantee I can give you $1 a day in value, $29 for my membership. Now you're not splitting that with YouTube if you do it my way. You're not splitting it with YouTube. You're not splitting it with Patreon. So you got 50 people. They're paying you $29 a month. So what's that? You're now making $1,500 a month. Let's say you pay for Kajabi, and let's say you're on like $199 a month plan. So now you're doing $1,500 a month in subscriptions, and you're paying $200 a month for it. Now that might seem like a lot until all of a sudden you get past having 50 people on subscriptions, and now you have 100 people on subscriptions, and now your price didn't change. So now it's going down and down and down. And then you have those people on subscriptions. But if you're on Kajabi or something like that, then now you say, hey, I've got the subscriptions. But now, you know what? There's people who want one-on-one time with me. I'm going to do one-on-one time. And so now maybe you're charging for one-on-one calls, and you're charging $199 for a call. Now all of a sudden, one call a month equals the cost of your Kajabi plan. This is also, by the way, this is my model. My model is whatever it costs for you to own your own platform. If you do a membership, you also do a one-on-one call opportunity for access to you exclusively. And that's either 30 minutes, an hour, or 90 minutes. It's one of those. Now, if you want to do two plans, I recommend doing 30 minutes and 90 minutes because that's a bigger gap and it makes more sense in price differentiation. It's like go big or go home, basically, right? So then you just charge whatever your own cost is so that you know if I get one call a month, my bill is paid for. Then your memberships are pure profit. So now if you have the membership, but you have a one-on-one call and the one-on-one call is $199 and the plan costs you $199, you only have to get one call a month to cover all your costs. And then your membership is all pure profit. And it's reliable profit because it's coming month after month. And your plan was for $29 a month. You will get $1 a day in value from me, absolutely guaranteed, or you leave the group. And you let people pay month to month, or you let them pay all up front for a year. So you charge $29 a month, or you say, hey, join for the year, $200. Now you know, oh, all I need is one yearly membership, and my entire monthly cost is paid for every time I get a yearly membership. This is how you offset the cost in your brain. And when you have a 30-day free trial of something, you know all you have to do is get one yearly sign up or get one coaching call that you can deliver on in that week. And then your cost for the month is paid for, and you never have it in the back of your head. So that's how you deal with this. And then the good news is you keep all of your revenue, and you're only paying your payment processor fees, which is 1% to 2%. So you're now keeping 98% of your revenue after cost, and you've already figured out how to cover cost. Then, of course, we make sure that we're doing everything we need with our bookkeeping and taxes. And then we make sure that that's in place so that we can pay the lowest legal amount percentage of our revenue possible by law. And that's why we have the bookkeepers and accountants, and that's why we pay them their fees. So we set all of that up. But this is also why it's important for us to also charge what we're worth and to look at our cost and to build our cost into our pricing model and to think it through. This is also why I have to deliver tremendous value and think, how am I going to get 1,000 true fans? How much of my percentage of my audience can actually rock with me, afford what I charge, value what I charge, but also, hey, those 1,000 true fans, they don't all have to come in at that $29 a month thing. You can find a one-time purchase so they can support you one time. And that's where a product like having a book that they can buy for $15 or buy the Kindle version for $9. That's where that comes in. Or you put together some kind of package or PDF or something that they can buy, or some PDFs that they can buy for $9. At awesomecreatoracademy.com, what I have is, if any of you have ever gotten value from me, we have 160 of you on the stream. We have 160 of you on the stream. I have a challenge for you. I want you to go to awesomecreatoracademy.com. I want you to look at everything we offer on the website. And we have 3 different products that are only $9. If I've ever given you an ounce of value, if you've ever made a dime off of me, or you've ever saved time because of me, I challenge you to go look at what I offer on my own website, awesomecreatoracademy.com, a place where I do not split my money with YouTube, a place where I do not have to be beholden to the algorithm. Look at one of my $9 products, see if it's worth it for you, and buy one to support me if I've ever given you value. And that's an easy ask. By the way, I'm demonstrating this, and the reason I'm actually doing this is I'm trying to teach all of you to stop being afraid to ask your audience to directly support you, not just with their eyeballs, but with your wallets. Will everybody do it? No. Do I think all 160 of you on the stream will do it? No. But guess what? If 10 of you on the stream did it, if 20 of you on the stream did it, then that actually would probably result in more revenue than I've generated splitting super chat, super stickers, which I'm incredibly grateful for, with YouTube directly. And that's a way that creators get direct support, is when their audience and their fans come through for them. That's how power is taken back from advertisers. Power is taken back from platforms. Power is taken back from the people who have all the leverage. And that's how the leverage goes back to being split between the creator and their audience only. And that means that a creator can say what they want, when they want, how they want, when they're not afraid of what a platform is going to do, because they know their audience has their back. And so, again, I know that's not a concern or a big deal for everybody, but for some people, and for some of you that are more aligned on those values, then that would matter tremendously. And what I would encourage all of you who are watching this stream is to think about, what is my membership model? Is it appropriate for it to be on YouTube? And I split the 30%, or Twitch, or Patreon, and I split the 50% or the 10%. Or again, some of you will do TikTok, and it'll be 60-40, I believe is right now what it is. You have to figure out, okay, am I going to give that up for the convenience? And then I'm going to be taxed on what's left. How much of my income do I actually get to keep when it's all said and done? How much of my income do I actually get to keep? You have to really think about that. Then you have to figure out, okay, and are there ways I can keep more of that? And would I rather pay for the seed and keep the tree? And then, do I have enough to justify that? Do I create enough value? And how do I create value for my audience? How do I over deliver on them so that if I sell them something for $10, they're actually getting $20 or $30 of value, and they're happy about it, and they'll go and they'll come back again, and then it'll all add up. Okay, how do I over deliver for my audience? How do I create things that they will care about? How do I listen to my audience? This is why I tell you to develop the audience avatar. This is why we teach you to develop the audience avatar, so that you won't have to guess what your audience cares about. You will know what your audience cares about. You will know what they buy. You will know who in your audience can afford it, and you'll be able to cultivate enough of a buying audience. You'll figure out what percentage of your audience is a buying audience, okay? And that becomes important. For some of you, if you're entertainers, unfortunately, it's going to be closer to 1%. If you're an educator, it's going to be closer to 10%. Now, if you're an entertainer, you still need to develop your own products. You still need to figure out an email list. You still need to do all these things. But you're going to have a tighter relationship with 2 particular things. It's going to be your donations and fan funding through the platform, and you will give up a percentage. And it's going to be your brand deals. And you're going to need those brand deals. And if you're not good at business and you're not good at getting brand deals on your own, you're going to have to get a brand deals manager, and you're going to have to give up 20% to them. They're going to eat what they kill. They're going to eat 20% of what they bring home. But your thing that you have to do is, they do not get any of your ad revenue. You cannot give your manager for your brand deals, and you cannot give your manager as a talent manager. You cannot give them your AdSense. Do not give them your AdSense. They cannot have it. Okay, they should have the confidence that whatever they bring you in value, whatever they bring home to the table, they get 20% of it. So they have to bring home the kill. They have to bring home the bacon, and they get 20% of it. That is the deal. That's the industry standard. If they're asking for that and your AdSense, run the other way. Red flag. Do not look back. Okay, I'm dead serious about this. They do not get to take something that you built and that they're not really contributing to you having or maintaining. Because then if they don't bring you any deals, they get something for nothing. Even if you can get out of the contract in 3 months or a month, they might have gotten thousands of dollars for doing nothing. And if they do that with enough creators, they make money for no reason. And it'll keep happening. So you have to understand the business. That's why these live streams are important. This is why I'm doing them. This is why I'm going to try to stream every week, once or twice a week if I can. Ones where I really can hustle, I'll do it 3 times a week. But this is important. And this is why I teach this. Remember, my villain origin story is I got screwed over. My villain origin story is that I got screwed over at 14,000 subscribers. I got screwed over at 14,000 subscribers, got locked into a multi-year deal, and got screwed out of thousands of dollars. And you know what? That's why I became a YouTube educator. I was a software tutorials channel. I was teaching you about Adobe software, photography, camera gear, graphic design. I was teaching you the skills of a content creator, by the way. I was teaching you the skills of the content creator. And I was teaching you some social media marketing so that you could get opportunities off those skills and build a personal brand. I was teaching you skills and personal branding. Everyone knows that that's what I was doing more or less from 0 to 100,000 subscribers. The main reason that I ended up teaching content creators is because I got locked into a multi-year deal and I got screwed over for thousands upon thousands of dollars. I spent 3 years of my life fighting to get $4,000 of back pay on principle. On principle. It wasn't worth my time to fight for those $4,000. It was on the principle of the thing. Because I'm petty as hell. Like, you will not steal from me. That's a thing. So that's how I became a content creator educator. It was out of spite for the MCNs. And I was like, I can teach a content creator to do everything for themselves that multi-channel work claims to provide. And I can probably, in my own petty way, to some small degree, maybe not tackle the whole thing. I was like, you know what? If enough people know what they're doing on their own, these people won't have a leg to stand on. And if enough people catch on to the scheme that multi-channel networks are, they won't have a leg to stand on. So what if I teach it? And so, boom. So that's my villain origin story. Now with the platforms, I like what the platforms offer. I think that sometimes the revenue split though can be overpriced for what the value is, but the convenience and the monopoly allows them to do that. Also, the fact that most creators don't have the capital to pay for their own hosting and platforms, and they don't have the confidence that driving 10% off of platform to keep for themselves won't destroy their performance in the algorithm. I'm here to tell you that driving 1 to 10% of your audience to your own platform is worth it, because the loss on that is not significant in ad revenue and growth compared to keeping the relationship with your audience and building the 1,000 true fans. The 1,000 true fans that you have for yourself that pay you, and then the 10x of that, of the 10,000 plus email list beyond the 1,000 customer list, is worth so much more to you in value and in sponsorship equity than losing on AdSense, growth, performance, and subscriber count. So driving 1 to 10% of people off of your platform to your own thing is 100% worth it. It's why I want every single one of you to get the free 12-week creator guide, clicking in the link in the description and being able to get that, sign up for my email newsletter, because it's that important to me that I have a direct access relationship to you that's not beholden to an algorithm. And I think every one of you should also be looking at how you can build your own email list and how you can start that process. And even if you're an entertainer, there's ways to do it. And for some of you, for entertainers, even though they still have a lot of rules and boundaries that are very similar to the platform, a lot of you that are entertainers, your backup plan should also be you start a Discord server. But you have to be accountable in the community and curating your community in your Discord server so your Discord server doesn't get shut down. But a lot of you should be building a Discord server. And then if you're worried about driving people, off of like YouTube specifically, I think that most of you understand that's fine. You're more comfortable with your Discord server. And then you could use your Discord server to grow your email list if you're that worried about it with YouTube. I will tell you a hack though. If you're worried about it with YouTube, use your YouTube community tab to grow your email list. If you're worried about driving them off of a video, if you're worried about driving people off a video or a live stream, do what I'm doing. Use your YouTube community tab every single week to grow your email list. And you can use your YouTube community tab to grow your Discord server. And you can use your YouTube community tab to drive people to your own website. And then you can use it as a promotional tool. Still balance that with engagement in quizzes and polls and other things to drive community engagement around the YouTube channel itself. And you can apply the same methodology for LinkedIn, Twitch, X.com, and so on. But X.com and LinkedIn are better distribution platforms to drive people off of your own website without penalties if you're worried about being penalized by the platform. But your hedge against this is the YouTube community tab. So that's what I would tell you about that. So when's a great time to start a membership? In my mind, you can start Patreon on day one. You can start Patreon from day one, day zero. If you want to do a Patreon, that's totally fine. And then the other thing is, and again, Patreon's kind of a middle ground here. So you're not giving up 50% if you're on Twitch, 40% if you're on TikTok, 30% if you're on YouTube. Patreon is palatable because it's 8 to 12% that you give up. You can stomach that, right? You can probably stomach that. Long term, I want you to build your own thing, pay for the web hosting, and keep all the residual profit and build cost right into it. Build your cost right into it, because that's my model. And then I get to keep my money. And then I just pay the IRS. The legal least amount possible. So that's what I have to say for that. Patreon from day zero. YouTube membership is probably more for when you meet the requirements, which, 500 to 1,000 people. But you should have a plan for it. You should know what your value that you're going to deliver is, and you should really understand the audience. And again, figure out how you're going to get your first 100 true fans. They'll pay you money. Figure out how you're going to get your first 1,000 from there. Long term, my long-term goal, 10,000 on the customer list, and I'm willing to do it $9 at a time if that's what it takes. Eventually, I'm going to have a membership tier that's very low compared to the Awesome Creator Academy Pro group. Right now, we have like 80 people in the Pro group, right? And they pay right now, because it's not summer. In summer, new people will pay more. But right now, that's $59 a month for the Pro group. We meet twice a week on Tuesdays and Thursdays in the evenings, Eastern Standard Time. And so my group members get 8 office hours calls a month, and they get the 100 hours of training that's exclusive on the back end, and they get every digital product I've ever made, as long as they're a member, kind of like an Adobe membership. So they pay $59 a month for that. New people after the summer, at the end of the summer, new people will pay $99. All the old people will pay their same price. We have a yearly version, but I'm making something new that's going to rival YouTube, and I'm going to probably change my YouTube membership tiers and consolidate that, because there's a difference in value. And the thing is, I'm making something that's probably going to be like $9 a month on my own website, and it's going to be called the Creator Vault. And with the Creator Vault, what I'm going to do is I'm going to take ad-free versions of all of my best interviews across all of my platforms, ad-free versions of my best lectures, ad-free versions of all my speaking engagements, and I'm going to take my 100 PDF library that I've made of all my frameworks, all of the playbooks, all of the infographics. We're going to dump 100 of those. There'll probably 50 to start. We're going to dump 100 of those into this Creator Vault. So we're going to have a bunch of ad-free videos. We're going to have a 100 PDF library, and we're going to add to those things over time. But we're going to do a $9 a month membership to offset my current $59 that's going to go to $99. And so we're going to have that version. And so my belief is that over the next 18 to 24 months, we'll probably have 1,000 people sign up for the Creator Vault, because the value will be really good for $9 in terms of reference material and guides for people. Because these are not like one-page PDFs either. Like if anybody's ever downloaded my PDFs, you know what I'm talking about. You're talking about like 10 and 20-page PDFs and frameworks and things like that. Smallest is usually like 6 to 8 pages, and it's deep stuff. It's good information. So we're going to have like a $9 subscription that people can get, that's going to be over-delivered, and it's only going to get better over time. And people actually will also get access to a community with that. It'll be basically a Kajabi community where they can interact with the other people. So I believe we can get 1,000 people onto the Creator Vault, right? And this is another business model idea for you guys in terms of pricing ladders. It's pricing ladders. So we're going to have a very interesting low value offer in terms of low price, I should say, not low value. It's going to be high value, low ticket. It's going to be low ticket, high value at $9 a month. Get 1,000 people signed up to that. We'll cap the pro group at 150 to 200 members, kind of like my friend Jay Klaus did for his Creator Lab. And that'll be, right now it's 59. When the summer ends, it'll be like 99 for new people. We'll grandfather the 59 people in. So we'll have $9 a month, $99 a month. And then for locals, probably, with few exceptions, I'm probably going to do some invite only, never publicly advertise it, local mastermind group where we meet in person thing here in Atlanta. We'll also probably have an online meeting weekly, but it's going to be literally only for full-time creators that are making six figures. And that'll be a higher ticket private group, but I probably only have 15 people in that. And so the reason you build these things out is then you're building out a system for memberships that is price-based, value-driven, and has some tier of exclusivity. And then you're building a pricing ladder where people get value from you, and then they can decide for themselves if they want to go to the next level, determine their own level of involvement. Then you go from there, and those two first offerings are public offerings. Then you have a private higher level offering where you give your maximum time, maximum attention. I believe that those should be like invite only, application only, have to be approved, have to be aligned for that highest ticket thing. And then that's your back end. I also think there should be a local component to it, to having your people meet and coordinate and connect in person. So a $9 community is no live interaction, like no live access to you, right? $9 offerings, no access to you. A $29, $59, or $99 offer does give access to you, and you can decide how many times a week or a month that is. And then if you have a team, it's worth more, and you can value add to other things. And then you have a higher ticket thing that's the more elite, intimate access to you, but also the network of people that were vetted and verified. And those people have to be aligned in values. Like, so vetted, verified, and values. Okay. So those, the 3 V's. And then with that, that's the more private thing. There's probably like a dozen people, and that's it. It's a very smaller, more elite, more intimate, more exclusive thing. And I believe a lot of it has to be in person, in my opinion. So it's like, okay, here is online community, no live. Here's a live interactive community, interact with you and each other. And then higher tier community, access to you in person and to each other in person. And then that's the tiering system. So it's 3 levels. We always go 3 levels. Okay. Same thing with your own products. Your own products, in my mind, in terms of digital products, you do products under $10. Okay. Then you do products under $100. Then you do products under $1,000. It's your 3 levels. And those are your digital products. So I think I just taught you membership pricing tiers, product pricing tiers for all of you, and the model we use for that. And I think it makes sense the way that I said it. But that's just my approach. And that's one of the systems that I teach and one of the systems I build off of. But the thing is, it builds in cost, it builds in eventually scaling and growing a team, it builds in long-term value, it builds in scalability, sustainability, and it accounts for your internal cost, it accounts for your what value you get to keep after taxes and expenses, taking care of your team and paying them if that's the case. It also gives you money to invest back into the quality of everything you build, to make it the best that it can be and make it competitive. It also builds in the ability, if done correctly, for you to start thinking about buying advertising traffic to take you off of the algorithms again when it comes to selling, in case you're worried about being penalized by the platforms for marketing and taking people off platform. If you charge enough, then you can take a percentage of everything you're charging, put it into paid advertising dollars. Now the platform is not punishing you on organic. You just separate organic from paid. You don't do boost of your regular YouTube videos. You only do this for advertising, maybe even on a separate account. Same thing for Instagram. You do it with Instagram. You can commingle the accounts, unlike YouTube. But even then, you may not want to. A lot of people will do a company account and a personal brand account so they can separate those things, especially if you're doing brand deals. If you're doing brand deals, maybe don't do any paid traffic on your own account. If you're doing brand deals, you keep that separate. Then you have a business account that's only for the business to drive paid traffic through advertising. If you're using your primary accounts for doing any sponsored content, do not do any pay to play with advertising for your products there, potentially. And again, if you know exactly what you're doing, sure, if you know exactly what you're doing, but if you don't, and if you rely on those brand deals, just make another account for your own advertising. Make a company account versus the creator account. Have a company account and have a creator account. The company account runs the ads, and then the creator account is for you to do brand deals and sponsorship and do your partner program. And so you just don't commingle the two. And that would be my suggestion. But you want to make enough money to where advertising is an option, so you're not relying on algorithms and being a digital sharecropper. So again, long as hell answer, but hope it helps. Chloe, thank you for the $5 super chat. We got the KMH family question. Hope all is well with you and the fam, Roberto. We are about to launch our course through Kajabi. Congratulations. Thank you. And also a clothing line outside of our merch shop on Spreadshop. Would you recommend a separate LLC for each? Good question. What I would want to know is if the clothing line is a separate brand and if the clothing line is a separate entity. Initially, you don't have to. Both could be brands that are owned by the parent company that you have. So the thing is, the parent company could be named anything, and then the education brand could still sit under the parent company, and so could the clothing line. If you needed to separate them because of the team and the staff, and you not wanting to overlap on the team and the staff, or you want them separated for liability issues, because with an education business, sometimes you want it to be a separate entity for liability reasons. And then you could still have a parent company that's your S corporation sit above and own both of those LLCs. So in your case, for liability reasons, when you do coaching, consulting, courses, you might want that education business to be its own LLC. And then you might want the physical product business for liability purposes to also be its own LLC. And then you would want them to be owned by a parent company that sits above them as an S corporation. But again, talk to a lawyer, talk to an accountant about this. They'll be able to go through the specifics of your individual brands and company and determine what the best outcome is for you. Also, this could play a role, depending on which business is making more money, from a tax advantage standpoint, in terms of you deciding what your salary compensation is going to be, what your distribution is going to be. The same thing for, well, how many employees are in each business? And do you need those employees to be on payroll for one brand or the other? Or are they going to be on payroll for the parent company? And why? So you need to, that's a very specific situation. And it's an important one. Believe me, I've been through it. So I've incorporated, like I said, I've used Stripe Atlas. I've used Zen Business, which I can recommend Stripe Atlas and Zen Business. They're very good. I do not recommend LegalZoom. I've done it. I've also went directly through the Secretary of State website for my state, and I would recommend that. And it's, again, 90s web design. It's a pain in the butt to deal with, but say la vie, it's the cheapest option. So, talk to an accountant and a lawyer and get their advice and explain to them the nature and structure of your business and what you're trying to accomplish, what your concerns are, the employees you have for both, the profitability of both situations, and I would look at that. No, this is not Tang, for those asking. This is RX Energy to help me power through this live stream, but with some health benefits, and it's diluted with some water so that I can actually sleep later tonight. But it tastes about as good as Tang now that I think about it. So let's see. Oh, you're liking the beard? Yeah, I'm in my Steve Jobs era. I'm also in my villain era, so nobody mess around and find out. But yeah, I'm in my Steve Jobs and villain era. So the black turtleneck, jeans, sneaker aesthetic is a thing. So yeah, digging the minimalism vibes. That's what I'm about these days. Dr. Kaufman says, okay, you make money by coaching people and you're giving away content to gain trust. Am I right? It's a couple of things. Actually, it's a couple of things. One, I actually like talking. If you haven't noticed, I like talking. I like running my mouth, so I might as well monetize it. It's been the entire thesis of my channel and even my public speaking is I like running my mouth and I'm good at it. So I might as well monetize it. When I was in high school, one of my best friends told me, I bet you that you're going to grow up and you're going to get paid to talk. And he was right. So that's one thing. Just know your strengths, know your weaknesses, know your idiosyncrasies, know your quirks, and then monetize them because you might as well. You might as well monetize being exactly who you are. No mask. So I'm upfront about that. Number two, I gain trust because I produce results. I wouldn't have trust if what I was saying, if I was just giving information and it didn't work. If I was just giving information, I couldn't cite my successful clients. If I was just giving information, my community wasn't getting value and saying I benefited from you, then I wouldn't make money and I wouldn't gain trust. People super chat me because I've worked with them or they've taken the free information and they were smart enough and clever enough to use it themselves. And so that's why I have that. I talk and generate traffic. The traffic only generates trust if it's good, and the trust only generates a transaction if it was good and if it was worth it. It's why I also have a less than 1% refund rate on all of my services and products, which most people cannot boast and cannot claim. I also have a 4.8 out of 5 rating in Trustpilot, which almost nobody in my industry has. And I have it for over 64 reviews, with my goal being to have 100 plus 5-star reviews before the end of 2024, which also no one will be able to boast. It's an undeniable result. The other thing I do that makes me trustworthy, which other people don't do, I'm working on doing more of this. I have gotten over 60 of my 500 clients that I've coached. I've gotten over 60 of them, and we're still auditing this to count. I've gotten over 60 of them silver play buttons. This is not my silver play button. This one belongs to Jen from Sewing Report. And so she sent me a copy of her silver play button. I'm collecting these from my clients. I have a couple more clients to collect these from. So I'm collecting copies that I'm willing to pay for from YouTube and have shipped from my clients. They also send you a nice little letter from YouTube. This one was from Susan before Neil took over. I'm having my clients send me copies of the play buttons that I helped them acquire. So my clients that I helped get play buttons are sending me some of their play buttons, and I'm paying for the shipping and for the cost of that. And the reason is because it's social proof, and it's also an undeniable claim. Once I show out of the 60 that I have at least 10 of those play buttons, there's also a couple that I helped get gold play buttons. Once I have like 10 or so of the silver play buttons up on display on the walls, and I have maybe 1 to 3 of the gold play buttons on the walls, it's kind of undeniable that I produced results for my clients. That is social proof that is beyond like arguing with. It becomes an undeniable result at that point. The other good news is that my silver and gold play button clients have done reviews for me on Trustpilot. And I'm also planning an interview series with a lot of them on my podcast. Undeniable results as well. And so those things will generate traffic. The undeniable results will be the reason for the trust. And then the alignment will be the reason for the transaction. So that's how it works. Traffic, trust, transaction. You build traffic by demonstrating your value. And then your value that you're demonstrating has to produce results in order for people to trust you. But beyond results, you have to be aligned. And then when people are aligned, there's a transaction. It cannot work any other way. Now, there are people who take shortcuts, and those people are what you might call charlatans. But the thing is, that's why it's not enough to have social proof. You have to have undeniable social proof. My undeniable social proof comes in several forms. It comes in the forms of testimonials. It comes in the form of teaching. It comes in the form of allowing my students and the people I've worked with and partnered with to also teach and to share their value and to share their experience and to share their lessons. It also comes from the trust that I've built with the peers in my industry and their capacity to vouch for me and collaborate with me and to share their information, to share their value. And so most of my money actually doesn't even come from coaching at this point. Most of my money comes from my consulting partnership with brands and my NIL and UGC. And NIL is name, image, and likeness. If you go to the Kajabi website, for example, my face is on the Kajabi website. If you go to TubeBuddy and Streamyard, my face is on there. That's what you call NIL, name, image, and license. That's licensing my reputation and credibility. And I built my reputation and credibility the hard way for over a decade. And that's why it's worth something to a brand for me to legitimize them in some capacity with my success and my story, which they audited and vetted to verify all of my claims, because they can't have somebody that didn't produce results representing them. So that's the good news also for people when they work with me, is that I've already been vetted, even by YouTube corporate itself, because I've collaborated with YouTube on their own YouTube channel accounts, and YouTube can't have somebody who's dishonest about how they grow representing YouTube as a company on their own platform. So I've been on YouTube's platform. They've even promoted me in the YouTube dashboard for a collaboration on their channels. Now, I didn't drive traffic to my channel, drove traffic to YouTube's own education channels, right? So the thing is, I had to build that all the hard way. The good news for anyone working with me is I've been pre-vetted by literally the company that themselves that does all of this, YouTube corporate. And same thing for the business side with Kajabi, and then all the other platforms that I've worked with, right? So that's where the reputation has value is, and then you commoditize that through UGC, user-generated content for a brand, by representing them, and NIL, name, image, license, and lending your credibility, name, face, likeness to that. And so I make most of my money through front-end brand sponsorships and representation, and back-end product consulting and development on how to improve product. The features that I ask for and that I say, hey, creators need this, creators are struggling with this, get incorporated into the back end of the products that I represent as a brand. There are features and recommendations I make to Kajabi, OpusClip, Streamyard, in the past, TubeBuddy, for example, and they incorporate these features, and then these features come out in product rollouts. That's why I have front-end and back-end relationships. I have front-end relationships in representing brands, and then I have back-end relationships in improving the products and moving into the product development side. My goal is to become a product development consultant over the next 10 years for a couple of creator economy companies and startups and unicorns, and ultimately to get equity. My path, and I've never been anything but transparent about this, is this. I was a creator that got to 100K on their own. Even before I told people how to grow a YouTube channel as any of my primary content, I got to 100K on my own as a creator. I did that from 2013, being consistent, to 2016. I got my play button in 3 years. In year 2, I went from 20,000 subscribers in February. You can check this, by the way. February 2015, I had 20,000 subscribers. By May of 2016, I had 100,000 subscribers. I actually figured out how to gain a whole nother 100,000 subscribers in about roughly, I think it's like 14 or 16 months, about a year and change, about a year and a quarter. At the time, unprecedented and rarely done, even by today's standards, rarely done. Less than 1% of all creators have a silver play button. I am the 1%. So that is something that overqualifies me to teach, because my result is now at 500,000+ subscribers. It's a less than 1% result by far in the entire platform. It's about 0.5 if I'm not mistaken. So the thing is, if someone's in the 1% or 0.5%, they have the absolute right to teach anybody. The other thing is, I've done over 1,000 videos on YouTube, overqualified to teach you about workflow, data reading in terms of analytics by doing 1,000 videos plus, in this case, 1,600 on the main channel over the course of more than 10 years. So the thing is, I've produced results. For multiple years, I gained over 100,000 subscribers a year. Now, that was before the pandemic depression, where I uploaded a third of the content. My content scales on volume. So in the pandemic years, where I uploaded a third of the content, I got a third of the results from that. That was the decline. It's not, oh, he fell off. It's that the months where I was consistent, I actually still gained about 10,000 a month. You can actually check this in Social Blade. If you have the paid version, you can actually go back a couple of years in time. You can see my trajectory. I think you can technically do it on viewstats.com. I don't remember what the limits are on that one for how far back you can go. But if you can go back about 5 years, you can actually see my content trajectory in my prime, and even whenever I would boost in the pandemic years by having a good month where I was consistent and then get depressed again from doom scrolling and then not. So you can look at it. So I have that part of it is I have the experience, I have the results, I have client results on top of it, I have vetting from the platforms on top of it, and I've done hundreds of pieces of sponsored content by this point. So I absolutely know what I'm talking about there. And for multiple years, I've done over 6 figures in sponsorships and brand deals. So I make most of my money from sponsorships and brand deal partnerships and from consulting. Not even from selling directly to my audience, but by working with corporations is how I actually make most of my money. The ad revenue side on YouTube right now, with me doing about a third of the content, is about $40,000 a year in YouTube partner program revenue. If I go back to 150 uploads a year, let's say split it between 100 videos and 50 streams, then it'll do about $120,000 in YouTube partnership revenue. That's actually the plan for this year, is to do about 150 videos and see if we can get that to about 120, 150 in YouTube partnership revenue, because that's also another provable result of, okay, if we take brand deals out of the equation, if we take me selling to my audience out of the equation, if we take everything out of the equation and we just do the YouTube thing that y'all want to do, which, by the way, most YouTubers do brand deals, YouTube partner program, and they also sell their own merchandise or something. So those are the normal avenues, which still puts me at multiple 6 figures there. The reality of the business model of YouTube is, again, a lot of people also will be entertainers and rely on AdSense. And what they will respect, even though I have $10 RPMs, what they will respect is, well, how much money did you make from the YouTube partner program? Because that's what they want to do. So then my new goal is, okay, fine, I'll make 6 figures in the YouTube partner program and I'll prove that to y'all because that's what y'all care about. Fine, I'll make 6 figures on the YouTube partner program. Fine. I'll just upload 3 times as much content, multiply the output, and it'll be done. Fine. The thing is, with brand deals and sponsorships, I've already proven multiple years of doing 6 figures to doing multiple partnerships. And the goal there is not to do one-off brand deals. It's that you lock in MRR, which replaces a regular employee's salary, by coordinating, collaborating with the brand, negotiating on deliverables, negotiating on likeness, negotiating on licensing, negotiating on payment arrangement and fees, which you can actually negotiate rates up and down depending on being paid more money by being paid later, or being paid less money but getting it all up front, or getting 50% up front. You can negotiate things like that. Primary example, you can give a 10% discount for getting 50% up front. You could do a 15% discount off of total price for doing 100% up front, and that would be a negotiating point that you could use. So, like I said, my model is traffic, trust, transaction, because it's the ultimate entrepreneur flywheel, if you will, for authenticity. It just makes the most sense to do it that way. And so the thing for me is that the audience leverage and audience capture facilitates awareness to the brands, aka my traffic gets me the awareness. Then by offering tremendous value, I build trust with the brands, and then they work with me, and it's a transaction. Anybody can do the same if they understand the alignment and share the right audience and share the traffic, and the audience and the brands align. And you say, the brand wants that traffic and the brand also wants to be trusted, and you can facilitate both of those things, then that makes it worthwhile for the brand to do a transaction with you. And so that's how you make your money from the brand side. And then the counterpoint to that is the little brother of brand deals that they can use as trust too, is proving yourself a salesperson by doing the affiliate links and affiliate marketing for the brand before you get a partnership with them. You just become an affiliate, which is basically commission only sales. In my prime, I was doing about almost 6 figures with affiliate marketing. That slowed down during the pandemic years. And so now it's only about 65 to 70,000 a year on the affiliate marketing side, but I do all right. I'll just ramp that up again, because by virtue of increasing my traffic, the affiliate revenue will increase. And so then that will go to 6 figures as well, and kind of just prove the point. Because for me, I understand that the social proof that many of you are looking for is the 6 figures. It's the thing everyone wants, the 100,000. So the goal for me now is to do the 6 figures in ad revenue and publicly, well, not ad revenue, YouTube partner revenue, excuse me, and to publicly display that. Do 6 figures in affiliate revenue and publicly display that. I already have the brand deal stuff, and basically off of NDAs, you'll just have to trust my PayPal screenshots. Since I can't show you the brand deal contracts, you'll just have to trust my PayPal transaction insight screenshots that it's 6 figures in brand deals. But I think that's kind of okay. When we just divvy up 5 brand deals, 12 months, we can kind of figure out math and say, yeah, it's probably more than 6 figures, and that's fine. So then that will kind of prove the point there. I already show the 6 figures per year from my Kajabi dashboard with the screenshots. We know that as I increase the offerings of a smaller tier subscription, increase the price on another subscription for new members only, grandfather old members in, and the fact that I'll finally start selling like a course that's a couple $100. There's 2 of them planned. We know that that'll increase the revenue, if not double it. So we'll know that that money's there. So the primary 4 models are YouTube partner revenue, my own coaching business and website, affiliate marketing, and then brand deal sponsorships. Scaling each of those consistently to 6 figures is undeniable social proof of the business acumen and business side of what I do. It is sufficient that I already make 6 figures doing any of it, let alone multiple 6 figures by combining it. And that should make sense to people. But the thing is, people only care about the aspect of the business that they want to do. Most of you would like to make 6 figures through the YouTube partner program alone. But you do understand what I'm saying about, maybe I should sell a product and not be beholden. And maybe getting demonetized sucks. So maybe do that. So you might care about 1 or 2 of those things. For some of you, it's going to be the affiliate side because you want theoretically what we might call passive or automated income. So then that's what's going to make sense to you. So the number that I have to prove to you there is 100,000 instead of 65 or 70,000 because it's not a sexy enough number. Fine. So yeah, that becomes a thing. The brand deals thing, everyone knows that that's how most content creators make the majority of their money is sponsorship and brand deals. I've more than proven myself there, and I'll just continue on that trajectory, and it works out for me. But there is a pathway that I'm on. Creator, coach, consultant, and the final form, my final form, I'm turning 40 this year, my final form is probably in my 50s, capital allocator. So what does that mean? Creator, I was successful as a creator. I'm successful as a coach, becoming very successful as a consultant. In the future, what's the goal? Capital allocator, investing in creator economy startups and investing in creator businesses and creator startups that creators own and getting equity in those. I plan to get equity as a consultant, and I plan to get equity as a capital allocator in the future by investing in the next generation of creators that are starting businesses, starting platforms, and also in the new companies that emerge in the creator economy. Beyond buying the stocks when they go public and they IPO, I want to be in on the ground floor before that and be an investor with equity. So I'm going to basically move to being an angel investor as I exit my 40s. I'm entering my 40s. My plan through my mid 40s to exiting my 40s is to move to the angel investing side of the creator economy. Does that mean I stop being a creator? Haven't yet. Does it mean I stop being a coach? Probably not. Does I stop being a consultant? Probably not. But it just means I will be moving my priorities over a period of time and over a period of decades to half decades. And so that should make more sense to people in terms of like, so what's my plan and how do I make my money? And here's the thing. I've always been transparent and upfront about what my plans are as I make them and as they change, because that's kind of the point. The point is I left my job so that I could talk about what I want to talk about, do what I want to do, say what I want to say, and not really have to worry too much or think about it too much before I do it. I left corporate America to never put on a mask again. I left corporate America to be able to run my mouth and say whatever I want. That's the point. So, like, again, long-winded explanation, but now everybody understands exactly what I'm about, where I stand, but you also know how you get value from that. That's been the point. The point the entire time, I do love this question because it's a great opportunity, is the thing that I like here is that you can watch me do the things I say I'm going to do. The OGs here, like Doug and like Lil Crafty Nook and Andrew and Stanley and all these people, they've literally watched me do the things I said I was going to do. I told people when I was going to get 100,000 and I did it. I told people I was going to get 500,000 and I did it. I told people I was going to build a 6-figure business and I did it. I told people I was going to make 1,000 videos and I did it. I told people who were going to be my sponsors and I closed them. I told people what I wanted to do. And I told myself, I put it on my vision board. It's flipped right now because we're doing a whiteboard video soon for the channel. I told people what my vision was going to be. I told people what I wanted to accomplish, and I did it. And also telling people, put people in position and said, I will help you. And a lot of you refuse to do that. I understand not everyone's a safe space to share your stuff with. I have a wonderful community and I have wonderful people in my life and I have a great inner circle. I have great people advocating for me. But you have to understand what putting yourself out there and having people who will go to bat for you, people who have delivered for you, people you've delivered for. You have to create reciprocal value for people. And you can only do that by being aligned in the values that you have and in the standards that you have. And so you have to at least have some people that you trust and that know you respect and that you know and that you're willing to have some level of vulnerability and openness with so that you can work together for your goals. And the thing that I regret most is when I was going 0 to 100,000. When I was going 0 to 100,000, I didn't have that many people I could talk to about any of this. The creator community, whoops, sorry, my chair there, awkward. So back in the olden days of YouTube, when I was getting started, the creator community was not back then what it is today. And we didn't have Discord. We didn't have none of this stuff, right? And so I did everything very isolated. There were like 3 people I could go to for a little bit of help and advice, and I didn't want to bother them because they had their own things going on. It was Amy Landino back before she married and became, she was Amy Schmittauer back then, and then she married and became Amy Landino. So I went to my friend Amy Landino. We came up in social media in the marketing space together. This is back in the early 2010s. And I'd go to David DeFranco. He was a tech YouTuber and vlogger and someone that I became part of his community, and we became friends, and he'd give me a little advice here or there. And same for Chris Pirillo. So I had 3 people, Chris Pirillo, David DeFranco, and Amy Landino. And they were basically the only YouTubers in the early days that helped me and gave me any advice. And it was like, few and far in between because I didn't want to bother them. And other than that, it was me and my community. And I grinded from 0 to 100,000, learned it the hard way, learned it myself. There was no YouTube education community back then. It was just whatever YouTube was putting out, whatever breadcrumbs they were throwing us back then. So what happened was that made me realize how lonely this is and how hard it is to learn things on your own. Because the thing is, if other people had been talking to me, I wouldn't have got scammed. If other people had been transparent about how the industry works, I wouldn't have got scammed. And a lot of YouTubers, big YouTubers, were advocating for a lot of these multi-channel networks, and it's why small YouTubers believed in it and got scammed. So, and so we didn't know that some of them were working for those companies and didn't know the relationship, and they weren't disclosing it. And back then, the FTC did not have the influencer guidelines that exist today. So this is all finally starting to be a legitimate industry and have some regulations, have some standards, have some rules and boundaries. But in the wild, wild west days, we were on our own. And a lot of us got hurt. And a lot of us lost thousands of dollars and lost trust in people that we believed in. And it was really bad. And so those old wounds and war stories are what made me start wanting to help and work with creators. And I did it one-on-one. And then I did the group thing. And we have that now. It's been going strong. And now I do a lot more, and I do the conferences, and it made me write the book. You again, if you would never pay me $1, the book is $10 in Kindle, but I also made it available in the public library through the Libby app as an ebook for people for free if they're too broke to afford a $10 ebook. I made it so people could go to the public library and request it into their public library in the book and get as much as they can out of it. And I made it free for people in the Libby app because I know not everyone can afford it. Like, that loses me money, but I did it, like, on purpose. And every time I go to an event, I give away copies of my book physically in person at cost every time I go to events. So, when I do these things, there's a long tail business side to it because I'm not naive and I'm not stupid. And I don't believe in pure altruism. Like, pure altruism might be a mental illness as far as I'm concerned, because it seems to attract a lot of weirdos that then end up being exposed for something, like Sam Bankman-Fried and Elizabeth Holmes and all those crazies, So no, I trust people with a profit motive more. I trust people with a profit motive that also have an axe to grind and have a mission and have a villain origin story than people who are altruist and pretend to be saints. I trust people who have a profit motive, have an axe to grind with some system, institution, or someone who aggrieved them. I trust people with that motive a lot more. And with a villain origin story, I trust them a lot more than people who are altruistic saints trying to save the world. I do not trust do-gooders because they've always disappointed me. So again, that's just my philosophy. I'm just a little bit too cynical for that. Probably a result of being 40 in a couple of months, 40 in a couple of months. So Stanley asked, Roberto, you said UGC generation. What is that acronym? Haven't heard that before. So it's UGC, user generated content. So if you do user generated content creation, this is where if we do a sponsorship and brand deal, and you can incorporate this into regular sponsorships and brand deals. If we do UGC, it means that we're making content on the brand's behalf on their platforms. So let's say I had Stanley, for the sake of argument, with TubeBuddy, primary example. If I was doing a sponsorship with TubeBuddy this year, the way that it would work out is maybe instead of just doing stuff on my channel or even doing anything on my channel at all, maybe TubeBuddy would want me to make a 6-video series and have it hosted on the TubeBuddy channel. And maybe they want me to do 3 Instagram reels for the TubeBuddy Instagram platform. And maybe they want to use my face in some advertising and want a testimonial from me. Now, all of that content would be owned by TubeBuddy, and they'd be licensing my name, image, and likeness for 6 or 12 months. And they'd pay me a fee for that. And they could pay that up front upon completion, or we could spread it out in monthly installments. But the goal here would be TubeBuddy would now have content of their own to market and to use, and that I would have produced it, shot it, edited if we agree to that, whatever. So they're paying me as a contractor to make content that they can use to grow their own platform. Instead of leveraging the exposure of my platform, they're leveraging the legitimacy of my story and my name and my likeness and getting content for their own channel. And so that's a different form of sponsorship and brand deals that we call UGC because it's user-generated content. It's content for the brand and owned by the brand and licensed to the brand instead of us leveraging my reach and my platform. We could use amplification, and that would be another add-on and line items. Now, sometimes what you do with a brand is you negotiate a long-term deal where you do both. You do some content on your platform, and you own that, and you license them usage. And you do some content on their platform and they own it. And you can share usage or they can have it entirely. And then based on that, you can negotiate price. And then based on the licensing agreement and licensing terms and duration of agreement, you can increase the price. Or based on exclusivity in a market category, like saying, hey, if I'm working with you, don't work with this person or that person during the terms of the contract. You can increase the price for exclusivity because of something called opportunity cost. If I only can work with you and not another competitor or another brand in an aligned category, then that means I'm losing or turning down money, which means you have to make it worth my while, so you have to compensate me more. That's what exclusivity terms are. Hey, you want to extend the usage of my name, image, and license? Well, hey, my audience has grown, my reputation has grown, I'm doing this. So now I'm more valuable. So maybe that price goes up every time you have to renew, which is why you pay for longer rather than shorter, because if I become too valuable too quickly, the price goes up faster. So I'm a bargain now. You're buying the seed and you're paying for the seed instead of the tree. So that's why you would do that. So that's what user-generated content is like, and what the brand deal structure and contracts around UGC, user-generated content, what it plays out to be. And it's great for smaller creators that have a good reputation in their niche, because now it's not about pricing on your reach, it's pricing on reputation and representation instead of reach. And that's why it can be better for small creators starting out trying to get deals, but why it can also be great for established creators who built a strong reputation because they have more to offer, and now they can have it both ways. They can sell their reputation, their reach, and represent the audience and represent the brand, and they probably can prove that they generate revenue at that point because they're established. So They have maximum leverage in that situation. And that's why I like to negotiate in my deals. In my deals, I like to negotiate both traditional sponsorship with UGC, and then that's how I can get to higher value. And that's why I can make multiple six figures a year working with brands, is because I do long-term contracts and I do UGC in addition to sharing my platform. That is a higher level of understanding brand deals and relationships. And there's a lot of details and a lot of nuance and a lot of agonizing over contracts and a lot of putting yourself in that position that goes with it in those 4 quadrants of reach, representation. And when I say representation, what I mean is represent the audience avatar, represent the customer. So you could substitute that word representation for relatability if you would like. You could separate representation for relatability or relationship if you would like, if it makes it easier to understand. But it's, it's your reach, it's the reputation that you have, and it is the proof of revenue generation that you could show, like selling something of your own or previous brand deals in the past, or affiliate marketing that you can show that you can, generate revenue. And then it's also that representation relatability side with the customer. You represent the customer. The customer relates to your story. The customer sees themselves in you. That's important to the brand. So that relatability aspect, the reach, revenue, reputation, if you can build in all 4 quadrants, you have the most leverage in brand deals. And that's what I teach. So that's why we have the brand deal starter kit. That's why I'm doing the brand deal secrets course. That's what we train and teach our members in Awesome Creator Academy, how to apply it to themselves directly. I teach a lot of that in one-on-one coaching with the creators who want that from me. So again, go to awesomecreatoracademy.com to learn more. But that's how I break it out. And there's a lot that goes into developing yourself in each of those. There's a lot of work that a creator has to do to develop each of those 4 things. And a lot of people do not do the work long enough to build themselves up in all 4 areas. There are plenty of creators who have a ton of reach, but have screwed up their reputation being divas, doing clickbait, getting into scandals, getting into public arguments, and it makes it very difficult for a brand to risk their reputation aligning with those creators. There are creators who get a ton of reach but can't sell for jack all, and it doesn't make any sense for a brand to work with them. You have people like, there was this one girl that I think had 2 million followers on TikTok and couldn't sell 30 t-shirts. So oh, you can't generate revenue? That hurt her reputation. It proved she couldn't sell. Brands didn't really want to work with her just purely on reach anymore, except for brands who only need exposure to her young audience. So there you go. So it's things like that. It's definitely things like that. You have to account for the intersectionality of those things. It shouldn't be interrupting you with ads every 4 minutes. I set the ads, unless YouTube's AI is bad, and it might be, by the way. It could be. That could also be some of the drop-off in viewership. I set YouTube to do those ads every 18 minutes. If y'all are getting it interrupting more than that, then YouTube needs to improve their ad system, because I set the ads for every 18 minutes. I almost decided to set it for further than that, knowing how long-winded I can be. But YouTube should only be showing ads every 18 minutes. If it's been doing it more than that, then YouTube's system has a problem, and I can probably try to do something about that. But I set the ads, and you guys who do streaming might be familiar with this. YouTube has a new system for automated ads. It wouldn't be the first time that YouTube's AI has, failed or disappointed us, let's say, which kind of sucks. Let's see. Finalized AdSense earnings have been adjusted for invalid traffic. Yeah, nothing new there. Speaking of YouTube, dropping the ball again. Freaking invalid traffic still. Let's see. By the way, I can prove to y'all that I set it for every 18 minutes. I'll just do that right now. I'll just share the screen and I'll just show you. Let's see. Video. Where's the where's the thing? It says downloads, rose back. Video monetization in studio. Mute notifications while sharing. Sure. Yeah. I can just prove it to you right here. So if you look, YouTube has a backend system here. YouTube has a backend system here for turn on live ads, pre-roll ads inserted automatically, let YouTube insert mid-roll ads recommended for you, choose how mid-roll ads. So I went to choose and set mid-roll ad frequency, and I set it for, wait for it, every 18 minutes. So if you're getting it more often than that, then it's not me, it's YouTube at this point. If I bump this up, which I think I can, I set this now for, now I've set it for every 24 minutes. I'll just hit save here. I've set it for every 24 minutes. So if YouTube is interrupting you more than that, not surprising that the YouTube system is less than perfect. It's shocking to no one, but proof's in the pudding. I told you guys. I set it for every 18 minutes. Now I've set it for every 24 minutes. So again, a lot of times creators get blamed for things that are on the YouTube system side, and it is not our fault. We're doing what we're supposed to. So, yeah, there you go. Yep, Doug Hewson with the simplest explanation of user-generated content. Content you make for the brand, for their social media and other uses. So their social media and paid advertising. There you go. User-generated content. Simplest definition you're going to get. The food boat. Yeah, this is actually one of the people who did a one-on-one call with me. So I remember you, the food boat guy. So food boat guy did a call with Roberto several months ago. Loved it. Totally worth the time if you're considering it. So boom, there you go. Yeah. How much is the coaching? It depends. It depends. So if people want a 30-minute YouTube channel review and audit, current prices, again, my prices change in June because I never raised my prices during the pandemic. I didn't raise my prices during the pandemic or for inflation. So currently my 30-minute call is $299 for a 30-minute call. My 90-minute call is currently, I believe, $699 until prices go up at the end of spring or the beginning of summer, whichever. So that's currently what the deal is. You can find all the information at awesomecreatoracademy.com. My best value offer for most people is going to be joining the Awesome Creator Academy Pro Group. The reason you would join the Awesome Creator Academy Pro Group, which is currently until this summer for new people, but old people are grandfathered in, is $59 a month. What do you get for $59 a month? Every single digital product we've ever made, you get access to, but you also get access to the Academy training, which is 100 exclusive hours of video, not regurgitated from my YouTube videos. And we covered that across 12 different categories for content creators, I believe. And we broke that down into different modules. Okay, so it's 100 hours of free training, and you can pick specifically what you're trying to learn more about. And we have that. Like we have a section on brand deals, for example. We have a section on affiliate marketing. We have a section on audience development, a section on analytics, all that stuff. All right. Usually every module has I think somewhere between 6 and 8 videos. So we have that. But more importantly, we have the pro group membership and the access to the members. So you get this network. Right now, I believe we have 80 creators in there. And we meet with video calls for whoever can show up to the calls 2 times every week for Academy office hours. So with the Academy office hours, you're getting access to myself and to my operations manager, Andy Rivera, who also is previous experience in design and brand management. So you get access to us twice a week, basically 8 times a month for $59 a month, and access to all of our digital products, hundreds of dollars of value, thousands of dollars of value. And you also get access to the other members and the community in the private group throughout your week, day in, day out throughout your week. And we answer any questions posted to the group. Other group members do peer review and help you in the group because you help them. So it's reciprocal. And then you get office hours with your instructors twice a week, 8 times a month, $59 a month. And again, all the exclusive back-end training, all the templates, the PDF libraries, all of it. So that's the deal. And like I said, we're adding some full-on courses instead of mini courses. We're adding some full-on courses this year. We're adding 2 of them. And so again, in the summer, if someone's new, they're going to get all of this for $99 a month, but everyone who joins right now and everybody who's already in is getting it for $59 a month. So the question becomes, do you trust Roberto to give you $2 a day in value? Do you trust Roberto to deliver you the value cheaper than a Starbucks coffee every day? And not just Roberto, the other group members and the team. So there you go. So that's basically how the pro group works. And that's how I feel that's the best value that people can get right now. And anyone who's like, all right, I don't know about all of that. You can buy my book for $10 in Kindle and see if you got any value from it. You can watch my free content, 1,000+ videos, and see if you get any value from it. If you don't get any value, you don't save time, you don't make money from my free content, you don't have to pay me a dime. Just enjoy the free content. If you've gotten value from me and you still want to test the waters because a commitment is a big deal, and I understand that, that's why we made $9 products so that people can get a sample of what we can deliver and over deliver with a $9 product, because it's very little risk. It's the exchange of value, basically, of a combo meal at McDonald's right now. And the thing is, I would argue that our value is healthier for you. So I figure you're probably better off spending $9 with me than with McDonald's at this point. But I digress. So we made it easy for you to kind of sample and try and see if I can deliver something for you with one of our $9 products. And if I can deliver value for you there, then you can trust me to deliver value for me and everything else. And the thing is, before you do any of that, you just have to ask yourself if you got any value from me at $0, which many of you have. So, that's what we figured out. And we tried to make it as simple as possible. Double Pulse says, something that I'm surprised that too many people do not talk about is creator to creator sponsorships. Well, most creators don't feel and look at themselves and their fellow creators as businesses. So doing business to business deals doesn't occur to a lot of them. What a lot of people could do, and what would make sense, is to build a peer group or their own mastermind of 3 or 5 aligned and like-minded creators. And then they work together, promote each other's content, but also promote each other's businesses. And then they also, what they could do is they could promote each other's businesses, and they could do joint venture partnerships, what we call JV deals, or they could do affiliate deals with each other. And what they could do is they could do referral business. And so they could refer each other business and do like 20 or 30% of all referral to each other. They could do joint venture partnerships and share and coordinate across email list, and then do 50% of a digital product sale for each other, as compensation. And that would make sense for a joint venture partnership from creator to creator. But most creators don't have an email list. Most creators don't have their own product. And so it wouldn't occur to them to do JV deals with each other and to share their audience. Most creators also look at themselves as competition instead of collaborators. So it wouldn't make sense for them mentally, emotionally. It doesn't make sense for them, but it would actually be the smartest thing they could ever do. Smartest thing they could ever do is say, let's say you had a podcast. If you had a podcast, what you should probably do is, if you bring on guests that have a product or have something of very significant value, is arrange to be an affiliate for them. And then you do an affiliate link in the description of your podcast and all of the clips from the podcast across all of the platforms. Okay. For shorts, work in a QR code, since you can't link out. Work in a QR code into the graphics, okay? And then you do an affiliate deal for whatever their product and promo is. Then you get 30% or 20% or whatever they're doing for their affiliates, okay? If you do a podcast. So then everybody on your podcast that has a product, you become an affiliate of the product. If you deliver for them and you make a lot of sales, consider a joint venture partnership, and then you give them access not only to the podcast community, but maybe to your email list, and you guys do a joint venture partnership and that works out, and you get 50% of every dollar that you bring them. Every dollar you bring that person, that fellow creator, you get a 50% commission. That's a joint venture partnership. Okay. I'm actually working on something. I bought a domain recently. I bought creatordictionary.com so that I could make I got to find a WordPress plugin or something, or some other tool that lets me build my own like urban dictionary or whatever, but for creator terms, because I'm going to build a dictionary and glossary for creators. And I bought the domain Creator Dictionary so that I could do this. So again, another niche website from Roberto, right? So brilliant. Yeah. So I'm going to do an entire dictionary and glossary of all the terms for creators and for the creator economy, and have that, and have a website, and have like hundreds of pages of content from having a dictionary. And then obviously that traffic and everything that goes with that's going to be worth something. So see, your boy's a businessman. Y'all think I'm just an artsy fartsy creator. I'm a businessman. Been doing websites since I was 13 years old, and I'm about to be 40. Like, I've been doing this for decades, literally. So what I'm looking at is, again, joint venture partnerships, JV deals. If you do JV deals with the guest on your podcast, it makes perfect sense. And that's a great business model, great business play that people don't think of. You do affiliate or JV. Okay. And this is on top of the fact you get to do sponsors on your podcast. And this is on top of the fact you get to do ad revenue on your podcast. And this is on top of the fact that if you're smart, you're doing affiliate links for other things on your podcast, like Amazon, or to other products, or to SaaS services, software as a service. And this is on top of the fact that your podcast could lead into your email or into a membership, whether it's on YouTube, Twitch, whatever it is, Patreon, whatever it is, a membership. And this is on top of the fact that you could also do merchandise. And this is on top of you see where I'm going with this? This is why I do work with people, is most people would not think of this. Most people, it's not that deep for them. They're just trying to get AdSense money, or they're just trying to get donations. It's not that deep for them. It is that deep for me. I'm an overthinker and I talk too much, but I monetize it. So like, that's how I think about it. So what you're looking at when you say, like, if a brand can sponsor a creator, what you're really looking at is, you're talking about what the term you're looking for is a joint venture partnership. And this was done in the niche website days for bloggers. Bloggers understood this. Affiliates understood this. This is what you're referring to when you say a creator sponsoring another creator, is literally just called a joint venture partnership, or a joint venture deal, what we call a JV partnership. Yep. Hey, what's up, LeBaron? Appreciate you. Yep. So Elazitica VR, looking at your situation there, what I would tell you is, when you can get like a virtual address, go, and when you do the update for the registration to your business entity, change everything to the virtual address, and then you should be fine. I think that you'll be okay if you go that route. Yeah, an association with larger brands can give you an advantage, for sure. For sure. Absolutely. Death Monkey XL says, I listened to a book called The Introvert's Edge to Networking by Matthew Pollard. Thought it was pretty solid info. I like that. I'm going to look up that book. I think that could be great. No problem, Juan. Appreciate the question. It was fantastic. Yeah, man, I'm behind on some of these questions. I have merch, but no one's biting so far. Okay, for those of you who are doing merch, but no one's buying it, look at the free workshop I did here. It has 600, it's a live stream replay. So it's on my YouTube homepage, but it's also in the live tab for my YouTube channel. I think it has 600,000 views at this point. So there was a live stream that we did And it was a workshop in partnership with Spreadshop at the time. And I think it has 600,000 views. In fact, actually, yeah, I can show you here. Share screen. Share screen. Okay. So if you go to my YouTube channel, right? If you go to my YouTube channel and then you scroll down, and if you look for this thumbnail right here, okay, with the Photoshop logo, the t-shirt, the orange background, start designing and selling merchandise. This is a workshop I did. This is a workshop I did that tells you everything you need to know. It's a 3-hour and change workshop. And this teaches you how to design, sell, and market merchandise. And the main thing is, do not make it your logo. See this? Creator is not my logo. Creator is an identity for my audience. And then the tagline in here, if you met me in person, it said, make things you believe in for a living. Okay. So that's not even my company slogan or anything. This is just something that is an identity and a value that my audience has. Now, there's other ways to go about this. If I just write creator in graffiti or cursive, it might look cool enough. And the thing is, I have t-shirts, and I have a new line of t-shirts that I'm going to be designing with another creator. I'm doing a collab with another creator, and we're figuring out what that could look like. I might just pay him up front for his end, but do marketing as the collab. So the thing is, instead of doing JV on the sales, we're doing audience share. So he wants the audience share and exposure for that. And I want his skills because he's an artist more than a designer. So I want the skills, but he's going to do some graphics that are going to be dope that creators are going to want to think. It's not a logo thing for me. It's going to be just a cool art centerpiece of a t-shirt, hoodie, hat that people are going to be like, oh, I want that. That's dope. That looks so cool. That screams creator to me. That screams creativity to me. And so people are going to want to buy that. What you want to do is you want to look at culture, and you want to look at community, and you want to look at identity. Okay. And then you want to make something for your audience that is about them. And so it's about culture, community, identity is all about that. So then they'll want to buy that thing because it represents them instead of representing you. It will be a shared identity of you and that community, but it will be more about them than it is about you. And that is why they will buy it. And so to learn more about that, for any and all of you, you want to watch that free workshop, that free training that I did, sponsored by Spreadshop at the time. We have some more stuff coming up. There's a couple of other brands that are interested in working with me around workshops on merchandise and brand deals. We have a series planned together if it all works out. If it all works out, you guys will get a 3-4 episode series and probably a workshop or two out of it that will be for this year. If that all works out, it's great for me. Another brand partnership, tens of thousands of dollars. Yay. So the thing is, if that all works out, we'll be doing more of it. And yeah, but in the meantime, you can enjoy that one. Free workshop, free training, something that should be a course. It's 3 hours. Courses that sell for like $199 or more are 4 hours of training. You know, $199 to $299 for 3-4 hours of training. You're getting it for free because a brand paid me for it. So that's how the value of brand deals gets down to the community, is the brand can subsidize the value. So does everybody who donates, everybody who buys a product, they subsidize everyone who can't. And so that's the smart thing that you can approach when it comes to thinking about why you're going to charge, how you're going to charge, is that how can my 100 or 1,000 true fans or these 5 brands that I work with help me do better by everyone who can't pay me a dime? And so then you build it out that way. Consumer Appliance Report, thank you for the $5 super sticker. Appreciate you. Yeah, diversifying platforms and income streams, absolutely. Diversifying platforms and income streams, absolutely, 100%. Yeah, in general, in general, I always ask myself what is and isn't sustainable. I've thought about a lot of this, and that's where the stuff I thought about a lot of it during the pandemic. Actually, during the pandemic, I thought a lot about the future sustainability. I also thought about, well, what happens when I get married and I have children? What do I do? And I thought about, okay, at that point, I definitely have to have the team in place in a more robust way. I will give up, like, even before that, when I'm like in a, like on the way to like marriage and kids, in a like sustainable like situation, in a deep committed relationship, it's immediately, and probably before that, give up the editing, outsource the editing, give up the editing completely or 80% of it, right? And bring that all in-house, figure it out, train an apprentice, give that part up. Do the photo shoots and do the photo shoots for the thumbnails and give up the design, but handle the brand management and move on to being purely a creative director, right? So the thing is, editing and design, I would give up and then purely become a creative director, decision maker, and the talent. And so basically I move into that position and completely replace myself, right? By doing that, I buy back a lot of my time, and then that makes the family situation far more sustainable in that situation, okay? Because then it moves me literally, my plan and my exit in that situation, wife and kids. My wife and kids exit plan would literally be to spend maybe 10 to 15 hours a week on my business. And how would I manage that? It's because I would have my weekly team meetings, which would not be very long meetings, maybe twice a week for 30 minutes. And I probably have couple 30-minute meetings with whoever is running a particular specialty once a week for them one-on-one, because they need support from me. I'd probably have a general admin or general manager that handles most of the heavy lifting, so those people have a point of contact and they have a human approval, and that person flows up to me and is a direct report to me. So the thing is, I can reduce the admin side of everything I do to probably somewhere between maybe 2 to 4 hours a week of admin work. And then in terms of the rest of creative work, probably me filming content for 2 to 4 hours a week, for like interviews, segments, straight up content, just me being on camera. And then the editor and producer are going to take over all of that. The designer's going to take all of that and they're going to run with it. Like, do the photo shoot once a month for all the thumbnails in advance, any poses they want or need from me that we don't have, whatever, to keep all of that fresh, to have a back catalog of it, boom, whatever. And then, because like basically the goal would be to, instead of working 40 hours a week or whatever, I would reduce myself to working 40 hours a month and I would allocate it specifically. So then what I'd probably do is I probably wouldn't be the full-time person in the academy at that point. What I would be is I would have hired more instructors that are specialists, and I'll still come in because they still are paying to some degree for access to me. But then maybe I'm not on every call twice a week. Maybe we have so many instructors that we're Monday through Thursday, and then we're letting people use the weekend warrior method so that Friday, Saturday, Sunday, they're working instead of learning more. And so if we do like Monday through Thursday, then I'd pick one of those days a week and I show up in like on the live calls 1 day a week. And so the rest of it is for my family. I'd work 40 hours a month, and then I'd probably limit the amount of coaching calls, drastically change my prices when I have a wife and kids, because then you're competing with my family for my attention. My prices go up considerably. When you have to compete with my wife and children for my attention, my prices will go up considerably for my one-on-one time. It's not a question. It's not a debate. It's not a negotiation at that point. It is a boundary. And I think that most people should think about that boundary. I think everyone should change the nature and relationship they have with their business, their customers, their clients, and their audience when they have another relationship that competes with. But that's a personal philosophy. That's just me. I think that's healthy. I think less people get divorced that way in this industry anyway. So maybe in entrepreneurship in general, more marriages would last that way if people considered that. So what I would do then is I reduce myself to about 40 hours a month, basically about roughly 10 hours a week, 15 hours on some weeks, so I'd reduce myself to about 40 to 60 hours a month, period. And the way I would do it is I'd be batch recording. Maybe it's not every week. Maybe it's every other week that I batch record 4 hours of content with my team. And then editing and production is all on them. And I just make decisions and approvals at that point. And that's only if it needs to go past my left-hand man or woman, who would be my, the manager over the brand and would probably be able to anticipate me, having been trained by me. And so then I'm just the final last call, the last line there. Buck stops with me. Somebody's going to do quality assurance before that, and then the manager's going to do another round of checks, and then I'm the last line. So we would probably go more that route. It's probably only a team of 5 or 6 people on that at that point to do everything, because I'll just get specialists that are very good, and then again manager and admin. So that that's where that would come in. And so beyond that, we do contractors and freelancers beyond that. And so then what would happen is they'd be doing the posting, scheduling. I'd be slightly less accessible. I probably wouldn't log on to social media as much because we'd be posting the content. The team will respond to things. We probably put more, boundaries around me because I'll be invested in my family at that point. And we would limit my coaching stuff by raising the price. The way we limit my coaching calls would be by raising the price. We'd obviously support our academy members. And like I said, I'd come in once a week. And other than that, they have everyone who's a specialist doing the job there. They'd be in good hands. They'd still have access to me, but I'm, limiting that, giving more of it to my family at that point. What else would we do? Yeah, we'd do the recording stuff like every week or every other week for 4 hours. That's enough content to go around all the platforms by far to batch record to get stuff out constantly. So they'd be working on that. By that point, we would have built up email list, IP, all those other things and everything like that. So I don't have to be boots on the ground for that stuff anymore. Speaking engagements, probably only do them 4 times a year, maybe. Take the family when I go, if they want to go. If not, take the team only. Usually probably both, but take the family and take the team. Either get out or extend it to where there's time after the event or before the event for a mini family vacation. That's probably how I'd manage that. And so that's what would make all of that sustainable long term. Digital products make it sustainable. The likeness and licensing from the UGC plus NIL play would make it sustainable. In about 2 years, in my case, in about 2 more years of doing this, in my case, it becomes very sustainable because in about 2 to 3 years, I think I can pay off the mortgage. I think I can pay off the mortgage in 2 to 3 more years. So the thing is, with no mortgage overhead, if I do pull that off with no mortgage overhead, everything becomes easier because everything becomes much more scalable and retainable from a financial standpoint. So that would be wildly practical. And, I'd imagine that in a situation like that, whoever I marry, my wife would be knowing she's marrying an ambitious person who does enjoy their work, but I would try to prioritize family and I would try to reduce my workload to as low as possible. But I think that somewhere between 10 hours a week to 20 hours a week and mostly being managerial at that point is being more than present enough, because the average person still has to work 40 hours a week all the way to 65. I would have the option in my 40s of only working maybe 10 to 20 hours a week. And that's still like a fraction of what everyone else would be doing in our peer group. And so that would make sense. And, in the early years, I don't think I have to be crazy about be there for everything crazy, considering how much more present I would be than the average person. So the thing is, it still would make sense. Even if I did 30 hours a week, it would make sense because I'm also doing it work from home. So, it'd be fine. And it's flex time and it's not, it wouldn't be wild. And the thing is, I could condense it into working 4 days a week. I could do 20 to 30 hours and I could do it 3 to 4 days a week. That still makes me more present than every other dude out there. So that's how I would swing it. That's how I'd make it sustainable, in the long haul, and then just ramp it down by delegating and automating, eliminating things that don't matter. I'd probably, again, I'd make time for my community, okay, for 1 hour, ask me anything on Twitter, blah, 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 do stuff like that. if I'm on the way to an airport or something like that, do an Instagram live on the way to the airport because whatever. So, I have a long-term plan and I have an exit strategy. Mostly it consolidates around debt elimination and reduction, automating and scaling income, reducing income tied to time, and income increasingly being tied to value and reputation instead. Value being delivered through product rather than active time, such as this. Reduce doing something like this to a once a week style play, or to doing like a podcast interview or something like that. Reduce it dramatically to this. Maybe limit podcast interviews to even to a month, doing bigger and better guests at that point, doing everything potentially in person, inviting people out to the house or the studio, whatever, for bigger plays. And, maybe even still doing some of it remotely, and then doing that and going to a quality, high value play on that with reduced output on the podcast side, but making it much higher tier. And then doing stuff like this for my community and just reducing the frequency of it, but making it very special. And again, the hedge to that being, well, it's because it would compete with time with my family. And so that's the long-term sustainability play. And I think more creators should look at that and look at, what do you do about moving to, that situation where you changed everything in life around the fact that you have, your family to think of, and anytime you spend doing anything else, this time you're not spending with them. What does that look like? A lot of creators don't think about that. That's also why a lot of creators are leaving YouTube. Stephen V. Tran. Hey, what's up, Stephen? Says, hey, but you also have channel memberships, right, Roberto? So what makes you keep that? The way that I'm going to do it, and the way that I've kind of been doing it, has been some combination of early access, other things. What I'm probably going to do is I'm probably going to consolidate and eliminate tiers from channel membership and only make the channel membership $5 and make it be the access to the exclusive content, but also to coupons, discounts. And the way I'm going to make that work for people, because it's convenient for them to do YouTube, is what I will probably do is raffle recorded channel reviews to channel members, but also give them some exclusive content. And then we also take that same exclusive content for the Creator Vault. We'll probably do exclusive content for the Creator Vault for the videos side, ad-free for both channel memberships and Creator Vault members. However, for Creator Vault members, the difference will be they'll get the PDF library as well as that. But the difference on channel members is channel members will be in a raffle for a pre-recorded 10 to 15 minutes of me doing a review of a different channel member's channel and posting that in the YouTube channel members community. So it'll be a different perk, different type of audience, different type of relationship, and people can choose their own adventure. So it'll be, I will change it and make it choose what is valuable to you. The video content, we can make the Creator Vault and say, okay, here's like a bunch of ad-free videos, and YouTube channel members also get these ad-free videos. And maybe it's a total, let's say it's 50 to 100 videos. I think we have 100 videos for YouTube channel members right now, right? So it'd be a choose your own adventure. Same 100 videos ad-free. You can watch them on our website, or you can watch them on YouTube channel membership platform. However, the difference will be this. The difference will be that Creator Vault members, they're paying $9 a month, also get the PDF library, and they have access to that. And they might care a lot more about that. They also will have some discounts on the other products. They might care about that. However, there's a big however. The people that are doing the YouTube channel membership, because it's convenient for them to be doing YouTube instead, and it's also cheaper. $5 is not $9, so that's fine. Even though I only keep $3.50 of it because YouTube takes 30%. What we will do is, people on the YouTube channel membership side, we will do raffles where I will literally do kind of a live to tape, but not live stream, but like a recording straight through, where I take maybe 10 minutes of reviewing a YouTube channel from a random channel member, and I will post it for the channel members. And so people who say, oh, I like the idea that I might randomly get Roberto to review my YouTube channel, and I get all this extra exclusive content, that's worth my $5 a month. That's where we will get, the people who want that, and that's what that will be. So it's just, I will let people decide their level of involvement. I will reduce the effort on my part by basically simultaneously making exclusive videos and sharing them among the two groups. But I'll have an exclusive play for YouTube channel members and an exclusive play for Creator Vault members, and people can choose their own adventure and choose their price point that matters to them and what matters to them the most. And that's basically my hedge. And the difference is that on the Creator Vault side, they know they're supporting me with like 100% of what they pay, and that they're also getting a ton of value on that side. And then the YouTube channel members, it's convenient for them to do YouTube channel membership to support me, and they like the exclusives there, but mostly they just want support. But they're getting the convenience that they want, and they're getting something in potential through the raffle system that they might like more. So there's that. Also, on the channel membership side, we might also do some digital product giveaways pretty often. So that would be another one of those incentives on that side. So it's just a matter of a choose your own adventure play. And that's what I figured out, because the thing is, there are people who only want to do things through the YouTube system. And I don't want to not give something to people who want to do it that way and want to support me. So it's that the people are doing the YouTube system, it's because it's an easy way and they want to support me. So I figured out, oh, well, let me do it this way. And this is how I'll split the difference. And this is kind of where it, segments off. But that's, if you're going to have the YouTube ecosystem, you have to play within the YouTube ecosystem. But I also want my own ecosystem. And so the thing is, I have to make that worth it to people, and I have to show that I can add more value than going through the YouTube system. So, that's kind of like, now again, I might be the only one who thinks that complicated, like makes it that complicated, but, it's me we're talking about. So, so that's a whole thing. Let's see. Yep, LeBaron, closed mouths do not get fed. Indeed, indeed. Certainly, I can agree with that. Let's see. Jason Dasho says, just purchase the starter and brand deals packs, great information to get the ball rolling. Absolutely. And the thing is, we've got more than information in there. We've got templates. So we've got templates in there, and basically it's a lot of done for you work right off the bat. Like, that was kind of like the key to those products, is I was like, I want people to get crazy value out of this. So what can I do? And my answer ultimately to that was, well, like, information is one thing, and that's a do-it-yourself play. I wanted a done-for-you play, a do-it-yourself play, a done with you play, and a done-together play. So what I figured out was that, like, coaching is done with you. Cohorts and groups are do it together. And you can think of my membership as an evergreen, everlasting cohort that you get to be a part of. So basically, I have coaching, which is the one-on-one with me, which is done with you. I have my pro group, which is basically an evergreen cohort, which is we do it all together as a community, as a group. So my cohort / my cohort's basically a group. My pro group is done together. The template bundles are stuff that's been done for you, and that makes sense. And now that we're moving into courses are do it yourself. It's, you're on here's the information, and you got to do it yourself, and you got to do the work. And so we wanted all four of those levels. And that's something that people do not account for in their business model, especially the education space. They do not think in these granular, detailed terms and it's not as intentional, as thoughtful as it should be. And so, like, I think that that's kind of an important distinction, and I think that that's a way to go about it. Let's see. We got Fazu Battlecaster, $10 super chat. Is there a way to export that email data from Discord, YouTube, Twitch community tab? Unfortunately, no. By design. Now, to some degree, the platforms can argue that that's a privacy protection thing that they do for people, and I would understand that. But ultimately, no. If people are on your YouTube or Discord or Twitch or what have you, the platform will not give you their email address. Now, they can argue privacy, but the real reason is they do not want to share the customer base with you. They do not want you to take people off platform if they can help it. And we all know that, and that's why they penalize you to some degree for doing that. And they do not want you to have the access without them. They want to control the access. Controlling the access is the value. Controlling the relationship is the value. Because without the platform as a facilitator, what good are they? And then what good is the revenue sharing? So their business model is keeping that to themselves. So they do not do that. So, and that would be why. But also, again, they can argue privacy issues for that. There are platforms that do. LinkedIn, for example, now, X.com, formerly Twitter as well. And so that's so when platforms say, oh, we can't do that because of privacy, it's like, well, you could if you really wanted to, but why would you? Because then you're creating a lack of a need for what you facilitate and a lack of a need for your algorithm. So why would you? So the dating pool roast reactions, $5. Hey, can't get in the YTP yet, YouTube partner program yet. Can I make money somehow? Okay, so if you're not in the YouTube partner program yet, which you could be if you're doing reactions, you could get there, especially if you do live streams. You could get there. It's probably watch time. If you need subscribers, do shorts. If you need subscribers, do shorts. If you need watch time, do lives. Basically, that's the rule. If you need subscribers, you do shorts. If you need watch time, you do live streams. So, and you do videos in between both. So here's what I would do. What I would do is I would also, in your case, set up a Patreon. You'll have some people that want to help you out with Patreon. I would also set up a Buy Me a Coffee link, which is basically just another way to receive donations. And then I would still shout people out and show the donation on screen. Even without super chats, I would just go through the process. Okay. So that's what I would do. All right. And then what I would also do is, in your case, you want to do the donations, you want to do the Patreon. I still would focus a lot on getting monetized on YouTube if you can. But if you need to make money, become a freelancer. Become a freelancer and figure out either the skill of graphic design, photography, or video editing, and make money through client services. And then use that money and save up and become a better content creator, or live off that money so that you can maybe transition from a 9-to-5 job. The reason that I was able to do content and take off in 3 years is I had time freedom because I was a full-time freelancer. I was making money for my clients. I was making money as a video editor. I was making money as a graphic designer. I was making money as a copywriter. I was making money managing social media accounts. I was doing all of the skills I did in corporate America for whoever would pay me. And then as a result of that, I had time freedom and money because I could make my money faster doing those one-off gigs than I could working 40 hours a week for salary. So I was making the same money I needed to live off of, the same salary money, but I was making it faster with less time, less frustration, less energy, and more time freedom. That left me a lot of abundance left over to make content. And so that's what worked for me. And so I would suggest that if you need to make money, you make money from the freelancing side, then you can do content creation at a loss without it being a struggle bus. And then you keep investing back into the content, and then you grow, and then you're monetized. Then you get that little bit of passive income. You'll find out the AdSense is not that good. That's what you'll find out. When you're a small creator, the AdSense is not that good. It takes years to make good money off AdSense, or you have to go viral. So the AdSense money, it's not that good. but it's something, and it makes you feel better, and it motivates you. That's really its main purpose. The purpose of AdSense is really not to live off of in a meaningful way. It is mostly to motivate people to keep making content. The way you're really going to make money often is selling directly and doing either brand deals or affiliate marketing or both. That's where the money is. I made my money on the affiliate side before I made it on the brand deal side. The affiliate side led to the brand deal side. I did that before I even made money on the coaching side. So yeah, so that'd be my recommendation. Got Ty's Hot Mess History in the house. Another client of mine, another silver play button client of mine, actually. Let's see. And we got some more super chats here. So let's see. Here we go. I don't know anyone who knows YouTube stats the way Roberto does. I always get value when I come here. He's amazing. Thank you, Ty. Appreciate you. Yeah, Ty's got a great channel. So yep. Let's see. Leave your blinds open when it's dark outside. We've been doing this since before it got dark outside. So I've just had the blinds open because I haven't gotten up from my chair in 3 hours. That's the only reason. Yeah, my editing tutorials helped a lot of people edit their first videos. We're actually bringing a lot of the editing tutorials back. My green screen tutorial is almost to 90K views. It's been, I think, 11 or 12 months. And my green screen tutorial is on its way to 100,000 views. Tutorials work, y'all. Tutorial space is still great if you know what you're doing. Yeah. Can UGC work for a gaming channel? Usually not so much, but it can work for a gaming creator. Now, here's the difference. UGC isn't great for a gaming channel, but for a gaming creator who knows how to edit, they can edit and they can sell their editing services to aligned brands that have similar demographics to gaming. But you're probably, think about it, how would you sell UGC as a gaming channel? You probably can't, but you could probably, as an editor and as a voiceover a voice actor, as an editor and voice actor, you might be able to sell it as a gaming creator, but not based on the reputation purely of your channel. I've worked with a lot of gaming creators, especially in the last year. I worked with a lot of creators who play Clash Royale, Clash of Clans, Clash Mini, Brawl Stars. I work with a lot of Supercell creators through a relationship I have with AMG and Supercell. So like AMG and Supercell do mobile gaming, and they have some of the biggest gaming some of the biggest gaming phenoms in the world with Clash of Clans and Clash Royale, for example, and Brawl Stars. Brawl Stars is a big one, and Heyday and stuff like that. And, so what I've done, I've worked with like 40 or 50 of Supercell creators. I've worked with probably 60, 70 gaming creators, including, people like Wolfie and A-Drive in the Pokemon community, ton of other people, right? I can tell you quite a bit about the gaming side. One thing I'll tell you is it is incredibly difficult to monetize over there, but it is not impossible. It's difficult, but not impossible. So there is that. But gaming relies heavily for a lot of people on sponsorships and ad revenue beyond anything. And there are other ways around it. It's usually, though, ad revenue, sponsorship, merch, and then usually being part of a gaming org. And so if you want to be a gamer, there are very specific business models. I have helped a lot of people get extra monetization in gaming by convincing them of the value of multi-streaming, and also clipping their content, aka using like OpusClip is getting a little better at gaming. They're working on it. Like gaming content for repurposing with the AI for OpusClip, they're getting better at it. Streamyard is trying to get there to be good for gamers too, but it's it's going to take considerable work. So again, they are my sponsors, but I also know they're working on that product, and I've worked with gaming creators, so I've been advising them to get better on those product offerings. The point I'm making is that with gaming creators, to not be entirely beholden to, oh God, I got to get big, I got to get views, I got to get brand deals, I got to do to make your money. The hedge against that I figured out is if you stream more as a gamer and you build a solid community and you get a lot of super fans, you can get donations. If you gamify your live streams, you can get donations. If you constantly stream, you can get donations. And then if you use repurposing for clips and shorts, if you do the short form vertical video content, you can monetize in YouTube, TikTok. As much as I love TikTok, you can monetize in YouTube, TikTok. Now they're doing a beta of ad revenue sharing on videos in X.com, formerly Twitter. So you'd have TikTok, Twitter, YouTube. Instagram Reels now has an ad program. It's not the bonuses, it's just straight up ads. So it's just like TikTok and YouTube Shorts. And surprisingly, a lot of people don't realize that there's money in Snapchat in their creator program as well. So basically, for short form, you have YouTube, Snapchat, TikTok, X, and Instagram. You have 5 places you can monetize and now it depends on your country, mind you. You can monetize and repurpose short form as a content creator, but especially, again, as a gamer. Now, on top of that, you can also multi-stream. And the reason I want people to multi-stream is because they can multi-stream and they can promote their creator code if they're a gamer. Basically, it's affiliate marketing for gamers where if you do in-game purchases with the creator's code, they get a percentage of those profits. So it's like affiliate marketing, but for gamers. So I teach this. This is something I teach in my one-on-one coaching with gamers. This is something I teach in my Academy Pro group if you're a gamer, is how to monetize properly. So there's the short form monetization strategy. Then there's the multicasting, the live streaming across multiple platforms. And the reason we do that instead of just consolidating to YouTube or Twitch is that we get to monetize each of the different streaming platforms. And so you want to simulcast even the TikTok, YouTube, Twitch, depending on if you can break out, Kick and Rumble too, why not? And get money and views where you can. And not be loyal to a platform, be loyal to the community, the audience, but you can simulcast and still be loyal to a type of person instead of to a platform and where they participate. That's why I do it. So the way that I approach it is this idea of being platform agnostic, then monetizing across all the platforms in all of the formats. So you use all 3 formats across all platforms or multiple platforms, usually 3 to 5 platforms. You try to monetize all of them. You get to do this simultaneously from the same amount of work, by the way. So more reach, more opportunity, more leverage, less work, less loyalty to the platforms. And so that's your hedge. You also, if you grow these, you also have more opportunities to have more diversity across brand deals and to use them across multiple platforms when you do get the audience to grow. You also, using the short form, any one of these can go viral and then it feeds whatever platform it can. And since you have a presence anywhere, wherever they are when you go viral, wherever they also cross over to, you benefit. So the thing is, it has cross-platform advantage off of siphoning from the virality. Wherever that virality might occur will funnel to any place that those people also are. See what I'm going with here? Most people do not think about this. So again, when people are like, oh, well, I don't know what the value of coaching is. It's like, well, it's because if I can then, I gave you a broader strategy on this, but if I can get specific and say, well, here's how we have to do short form for you. Here's how we have to do short form, your particular audience, your particular game, your particular personality. Oh, you need your editor to do this way. Oh, you're overpaying for what you're getting. Or, hey, get with your homies and see if they will give you a recommendation on a thumbnail artist because your thumbnails suck. And it's not worth you trying to learn to be better at. Let's just get one of your homies to give up their contact and you guys share a thumbnail artist. And now you're both getting better quality. Maybe you both get your thumbnail artist out of their 9-to-5 job. Now you're getting better quality. Now this person also knows they can't screw any of you all over because you'll both bounce. And then you always get great quality from them. That's a leverage, but it's also good for them because they're also getting more money consistently. So maybe like 3 or 4 of you, even if you play the same game, maybe you share 2 editors and a thumbnail artist so that you can get these people full time. Then they're working harder on your stuff and all of you are getting quality and they know they can't mess around because they'll lose all their clients. So like, that's something that most people don't think about. It's stuff like that. but it's specific to the creator. The coaching part is then specific to the creator. And that's where one-on-one is. Do-it-yourself stuff is you're intelligent and you're smart, but maybe you can't do everything in the right order, or there's gaps in your knowledge, or you know one thing but not the other thing, and the one thing you don't know, or the thing you don't know that you don't know what you don't know, you feel like it's a big vulnerability that you want to overcome, and that can make it worthwhile to do it yourself by having a course that has consolidated resources. Maybe you need feedback and you need pushback, you need people to challenge you, and that is where being part of a cohort and a community can really add value, is having constructive criticism and feedback in a place where you feel comfortable and being able to have some guidance. So that is a very useful aspect of that from the community side. And so that's why we considered that. And then in terms of done for you products, the reason we came up with that is with templates and stuff like that, you can get speed back and you can stop wasting time. A lot of time is wasted at having a blank canvas and trying to go from 0 to something. But if you can go from 50 to something or 80 to something, then sometimes that's just very much easier to do. And it's just getting you out of decision creep and analysis paralysis and fear of starting. Cold start problems are real. So I've tried to figure out, how can I stop cold start problems and just get people moving? And that's something I figured out. Michael Bond says, will this video be available later so I can watch it? So much info, can't keep up to make notes. Yeah, I keep this up on the YouTube channel so people can watch it. Anthony Rossaman says, I have a small channel that focuses mainly on shorts. I got 120 subs. How do I convert that more into long form video watchers? What you have to consider is that shorts are a different psychology, and that shorts audiences are not long form audiences. Shorts audiences are probably only shorts audiences. If you make shorts, in my mind, you don't necessarily convert those shorts subscribers to long form viewers. It'll be a small percentage. Maybe 1% of shorts people will be long form people. 1 to 10%. That's all you're going to get is 1 to 10%. You have to accept that. The crossover between shorts and regular videos and that to live streams is always 1 to 10% trade-off. And it goes back and forth for all of it. So if that's the case, if we're going to do multi-format, we should develop each of those audiences and serve each of those audiences. My thoughts around this are 2 to 3 shorts a day, 2 to 3 videos a week, and then 2 to 3 live streams a month. Not joking. 2 to 3 shorts a day, 2 to 3 videos a week, 2 to 3 streams a month. Daily, weekly, monthly. Breakfast, lunch, and dinner. That's how we do it. I'm not joking. And we use this to cultivate, serve, and feed different audiences. Shorts is your broad audience of people who are casually interested in something that you offer. Okay. And then, so that's broad match. Regular VODs or videos are phrase match. They're people that are more interested in a slightly more specific thing. Okay. And then live viewers are exact match. They're interested in you. They're interested in you. So broad subject matter, shorts, the bigger net. Okay. Videos are then specific, phrase. Okay. And then lives are exact. They care about you. So shorts people are loyal to the platform. Video viewers are loyal to the subject matter. And live viewers are loyal to the creator. Not joking. Short form viewers are loyal to the platform. They care about the platform. They're there for whatever the platform has to offer. That's why they're randomly scrolling. Regular video viewers are loyal to the content. And then live stream viewers are loyal to the creator, to the streamer. Not joking. I'm going to build a infographic around this, by the way. that idea, I'm going to build an infographic to make it crystal clear visually to people, because that matters. And when you realize that, and when you realize that's the funnel and that's the circumstance, you realize you have to build the 3 audiences if you're going to say, I'm going to be a multi-platform creator and if I'm going to do shorts. Now, another route you could go is just purely be a short form creator. That's another route. And I have a specific strategy around that. And that strategy is trilogies and series. It's mostly series. Series and sagas. It's series and sagas. So basically, we create a rabbit hole where someone can get out of the shorts feed and go into our shorts feed and then only binge watch our shorts during a session. So it's a watch time trap. It's a session trap. It's a short form trap. So I know how to create that trap, but it's a very specific strategy for each creator that's trying to do it. For each creator that's trying to do it, it changes slightly based on their audience, their niche, their subject matter, the editing, the time investment, and that's what changes the strategy. So it's something that specifically I have to work with a creator one-on-one that's doing short form because it's that unique to them in that particular instance. But the idea is to create a thing where every recommended like video that you do from the shorts, the related videos, you know, the what is it? They call it the content links, the related videos, the content links in shorts. Oh, what you want to do is you want to bridge them into watching another short almost sequentially and go deeper and deeper into a rabbit hole. So basically you want to create rabbit holes and traps. You want to create rabbit holes and traps in your shorts if you're doing short form. But the thing is, translating those people to long form, you've conditioned them to have a short attention span. Shorts has conditioned them to have a short attention span. They're going to ruin the performance and watch time on a long form video. So you have to accept that they're a different audience and not try to bridge that gap, because the best you're going to do is 1 to 10%, and they're going to ruin your thing if you don't hyper edit. If you don't change your editing style of the long form, at least in the intro, to be an Adderall addict's dream, then you've wasted your time bridging a short form creator to being a short form viewer. You've wasted your time trying to bridge a short form viewer to your long form at that point, because they're just psychologically different, at least during their viewing session. So there's a different mindset in watching short form and scrolling versus and scrolling short form is a lean in person. Watching longer form is a lean back person. And that's the difference. And so you're cultivating a mobile first, if not mobile only audience versus that. So it's a different experience, and it's a different viewing experience on the device side. So that's why you have to also be thoughtful about that, and you have to be careful about that. Dr. Orion Veterinarian asks, how much should you make before outsourcing the editing? I wish someone else would do that for me. This is why the good news for a lot of people is it's probably better for you to not go full time when you start making money that replaces your YouTube income or can rival it or whatever, and instead to take that money that is the extra. You can pay yourself a little bit of it, take the extra, dump it immediately back into an editor, continue to live off only your salary. Do not increase your standard of living. Do not treat yourself. Pay down some bills, pay down some debt, pocket a little bit of money, buy yourself one nice thing or one nice toy that you wanted or whatever. Take the excess money that you would normally be pocketing, invest in an editor, even if it's a very affordable or cheap or it's overseas or whatever you can afford. Invest in an editor. I wonder where the sad faces on the reactions are for. Where are the sad faces for? It's only 3 of them, but still. But the thing I would say is take the money you would normally pocket, give that to an editor. Don't give them a percentage of the AdSense. Just pay them. Like, give that to an editor. And now most of your time is back. And now you can make more content, higher quality content, more higher value content, focus on thumbnails that get more views instead of editing that gets more retention. And now, or outsource the thumbnails too. And then you take that completely off your plate, and then everything they do is better. And you're just now the talent and the business owner and the manager. Then, because you're getting more views and more retention, you're making more money than you were spending because this was all excess. So you're basically taking all of the profit, putting it back into growth, increasing the money, and then you can keep the excess of what is getting you views and retention. And now, because you can get you're getting more views and you're getting more retention and you're making that money, probably mostly from AdSense at that point, and you have more time available, you can probably go into streaming. And then because if you go into streaming, you can get donations from the audience, plus accumulate watch time and ad revenue off of a video you don't even have to edit. Now you're making more money from that on ads during the stream, after the replay. Then you can also then just take a little bit of money, get OpusClip, link in the description down below. That's my sponsor and my affiliate. And then you could run it through OpusClip, monetize the short form across multiple platforms, take that money, pay for that tool, and it pays for itself now. And now you're getting the value from the live streams, and that's your profit center until the editor and the thumbnail artist scale the content for you by you getting more views from the thumbnail artist. And then you're getting more watch time, retention, higher quality, better performance from the editor, which then is getting you more impressions, which then is leading to more views, and it's circular. Now you're growing at a faster rate than you were, making more money faster than you were. You have fixed cost from your profits now that could afford to pay these people. You're not coming out of really your own pockets from your salary at a loss. Okay, now you're truly profitable and truly sustainable because your biggest time sucks are completely paid for and outsourced. You have more time to find things to make more money. The value of your brand is increasing. You can now look at brand deals. You now are cultivating a larger audience to live stream too to make direct money there. You go into, and then you like pay a designer in Fiverr to make you the best, dopest merch possible. And then now you have something to sell to your audience as well that can be invested in. You can do that from the donation money and say, oh, I'll take the donation money. Then I'll use that so that like they can buy something directly from me instead of just donating, and I'll get the best thumbnail, the best Fiverr designer ever. And then I'll do that. And now you have a product, and now that's paid for, and you have it to sell in perpetuity. You have the evergreen content from the editor and the thumbnail designer, and that's continuing to make money. You have the live streams, and that's continuing to make money on the back end after the stream is over. The stream is repurposed and then farming you the money from the short form content, which is making you more money now off the same effort. And that time was only freed up because you're not editing anymore and you're not doing the thumbnails anymore. And so now you bought back your time, re-leveraged that time to go and make more money. Now you have that time to also make better content thoughtfully, intentionally. More of your energy is on ideas and strategy because it's not on thumbnails and editing. So now that it's improving the views and retention and audience growth even more. And now you're valuable to a brand. And now you make a deal with a brand, you deliver for them. You probably get to do a brand plus affiliate for them. Now, all of a sudden, because you have that, you have even more money. And now you can definitely get more quality out of your team because you can pay them more. Maybe even get them out of their full-time job because now you have the brand deal. Or if not, you profit purely from the brand deal. You use that to improve your own situation. Maybe that brand deal or 2 or 3 is more than enough to buy you out of your 9-to-5 job, buy you out of your salary. So now you have all of your time back. Now you have even more energy into ideation, even more effort in production. So now the editors have even better material to work with. The thumbnail designer has even better material to work with. Now everything is scaling. And now when you make enough money from that, because now you can get another brand deal relationship or you're making so much more ad revenue, you can buy them out of their 9-to-5 jobs. And now everyone's quality is better. And now everything is running on full cylinders. And then that's how someone scales and goes from being a hobby creator to a full-time creator to a full-time creator with a team to now a scaled creator business. I think I went overkill on answering that question, though. What do you do or recommend for building when you already are in a relationship? I thankfully have an understanding partner, but still worry about balancing this with a full-time job. One of the main things is to have conversations and openness about it and to be transparent and to become a good listener, to listen to their concerns, them listen to your concerns, and you all have a serious conversation about that and about what you want your life together to look like. So that's one thing. The other thing is to make sure that they always feel like a priority and that you are always working toward a situation where they can see the impact and value on your life and their life as a result of what you're doing. And so they don't feel like it's a sacrifice or a trade-off, but that it is such a wonderful thing that is improving your lives. And I think that that would go a long way. So the thing is, they should always, in my view, be getting something out of what you're doing so that they don't resent what you're doing. And we're going to try and wrap up here because we're running up on 4 hours. Do you see a trend in oversaturation of paid online courses when similar topics are available for free on YouTube? Your thoughts? Not really, because the problem is this, and most people do not understand this. Okay, so think about this. Everyone's like, oh, free content is superior and nothing's better just because you paid for it. Look at traditional education for a minute. Public school is free. Does anyone here think for 1 minute that public school is better than private school? Public school is free. So why would free content on the internet or on YouTube or whatever be better than paywalled content? Because I'll tell you, there's a big difference. Here's a difference right off the bat. Free YouTube content is made for the algorithm. Paid content's made for the customer. Immediately, that makes a difference. I want you to think about that. Content on YouTube that is free is made for the algorithm. It's made to optimize ad revenue. It is not made for the best experience for you to learn possible. 99% of the time, that's the case. 99% of the time, everyone virtue signaling and telling you, I'm giving you free content, I'm doing this. Let's be very real. They did not make a thumbnail that told you exactly what the thing is. They made a thumbnail to leverage your emotions and your attention. They did not make that intro getting directly into the value of the content. They made it for retention for an audience conditioned by Adderall addict strategies and Mr. Beastification of everything. So let's be very real that content in education has become edutainment, not education, and it's been watered down and made for an algorithm and not for a learner. And that's the difference. When it's behind a paywall, there's no more pandering to the culture of the platform, to the culture of YouTube, to the algorithm, and to the advertisers. So let's be very clear about that. And this is also the difference between public versus private education. Public is performative. Public is performative. That's what it is. I'm going to be real with you about that. Am I inherently saying that every single course will be better than a free content? No, not at all. Because I make my free content with the goal of making some people's courses completely worthless. But I also am making my courses with the goal of setting a gold standard in courses so that people can judge and decide what a good course looks like. And they will know now and forever what a good course looks like. Because I'm tired of people not getting value. So I don't think there's an oversaturation, just like I don't think YouTube itself is oversaturated, because I know that most of the content on YouTube is low effort, low value, low consistency, and low quality. YouTube is saturated with low hanging fruit. It's not saturated with an abundance or an embarrassment of riches of high quality content across every single niche. There's a handful of worthwhile creators in every single niche, at least in the English speaking world, which is why less than 1% of YouTubers have play buttons. Less than 1% of YouTubers have been able to cultivate audiences of 100,000 or more. Less than 10% of YouTubers have been able to cultivate audiences of 10,000 or more. Less than 10% of YouTube videos have gotten over 1,000 views over the last 18 years. So I know YouTube isn't an abundance, an embarrassment of riches of high quality content in education around anything. It is a handful of people, and a lot of this stuff is, the best of it is outdated. The best of it is outdated because people grow up, get families, move on, and don't keep up with it. They also do not want to keep chasing the algorithm and staying on a treadmill forever. So I know that courses that were made thoughtfully, curated, evergreen, and not pandering to an algorithm, pandering to culture, and having to be performative and having to Mr. Beastify themselves to be edutainment so that people will actually watch them. I know that free education on YouTube most of the time is not as good as something behind a paywall for exactly that reason, because public is performative. Private school kids get a better education than public school kids. Someone with a tutor usually does better than someone who doesn't most of the time. Free content, free education, and public school works for people who are already smart and need the least amount of help. I know this as someone who could get good grades on a test, whether I showed up to school or not. My grades in school were hindered by my attendance grade, not by my performance on a test. public school, public education, public free content works the best for people who are already smart, already motivated, already self-determined and ambitious. It doesn't actually help the people who need it the most of the time. The person it helps is the person who's smart and broke. Free content works the best for people who are smart and broke. Not kidding. And of course, someone would say, well, of course, a course seller would say that, but I'm saying that even as a student. And that's why I use the public school versus private school analogy for you. Is that, do you know who books work the best for? Books work the best for people who are smart and broke. I know that as someone who was smart and broke. When I was when I was in my 20s and even in my teens, I was smart and broke. That's how I know this. Charles says, I have the template kits. How do I get the coaching and other levels? So if you've bought the templates or anything from Awesome Creator Academy, the next level is you could either join the pro group, awesomecreatoracademy.com/group. You can join us there, or you can actually do one-on-one coaching with me directly, awesomecreatoracademy.com/coaching, and you can find it there. I'll try to add that to the description links for people like you, Charles. You could also just go to awesomecreatoracademy.com. You can find all the info there. You can find all the info over there. Let me try and see if I can, for the LinkedIn side. LinkedIn doesn't go past 4 hours, unfortunately. And we're at about 4 hours, and we're trying to wrap up the stream here. Yeah, Home Rapid Repair says first month he was monetized was $100, second month was 200, third month was 255-ish. Yeah, when you first get on YouTube monetization, honestly, you don't make that much money, just being real with you. Yeah, a lot of people give up. I'm glad most of you are still at it and still trying. Yeah, Kristen Stewart. So many short form people, they cannot get people onto their long forms. Yeah, it's a whole thing. It's a different psychology. I say it all the time. It is a completely different audience. So you should cultivate all three audiences. And that's why I broke it down. I'm going to do a visual graphic that breaks down those three different audiences for you. Charles, I just responded to your super chat. Thanks again for that, by the way. Yep. No, I was further back in the chat. I was behind by, I caught up, but I was behind by maybe 15 minutes. Yeah, you want to scale your coaching around your running. Yeah, no, motivation theory running. Absolutely. LLC was a good start for you. That was actually very good to start from the beginning, in my opinion. Let's see. Yeah, no, I try to run my live stream stuff. Yeah. Yeah, I try to. There, yeah, I had to do something to make LinkedIn work. I try to run my live streams in such a way. This is by design. I try to run my live streams in such a way that since I know that most online courses have about roughly 4 hours of material, I try to run my live streams to where in 2 to 4 hours, I can deliver more value than is in most people's $200 to $500 course. And the reason is I know when I release my $200 to $500 plus courses, I know that I'm going to over deliver there too. And I'm just proving it up front, which means that when I ask for that sale, it will be vastly easy to ask for that sale because my free content, I want it to be at a higher standard at every level, whether it's quality of production, or whether it's quality of information, whether it's quality of packaging and branding. I want it to be better than what people get from behind other people's paywall content. That is intentional by design. Not everyone will use that strategy. Not everyone will use that strategy. I'm counting on most people not using that strategy. But I want my stuff to be too good to ignore and too good to pass up on. And I want you to look at what I do for free. Well, what will I do if you pay me? And when you pay me even $9, I want you to go and look at what I give you for $9 and realize that I gave you more for $9 than someone gave you for $99. And then when you pay me $99, I want you to feel like I gave you more than someone paid you for than you got from $199 or $299. That's what I want. And then when you give me $299 or $699, I want you to feel that it was better than what you paid $999 for. Do you see? I want to change the standard and the goalpost for what people have as an experience, because then once they have that experience, they can't go backwards. That's a strategy. Now, most people will not do that. Most people will not do that. So that's how, I'm playing the game. I'm playing the game very differently than other people. And that's why you use a zig versus zag strategy. You differentiate yourself in the market. You have to find your point of leverage in the market, and that's how I'm going to differentiate. Is I understand that there are 4 vectors, right? So there's high value. High value is largely a matter of, let's say, the way you package and the perception around everything and your positioning in the market. Okay, so that's high value. High effort is when what you're doing is so extra that most people, 90% of your peers, are disqualified from competing with you because it's just too difficult. And there's easier ways of making money, easier ways of going about things. And it's too high of an investment of energy, money, time, skill. No, I just don't want to compete with your level of effort. I learned this in cross country and track, by the way. So okay, you go high effort, and then high value is perception and packaging and positioning. Perception, packaging, positioning. That's high value because it's about perception. It's about demonstration of value, really. Okay, it's about what people want and about them understanding that it's what they want. Clarity on that. All right. Then there's the quality. Quality is often mistaken for value, but quality is the experience you get. So value is the perception around your offer. Quality is the experience of the offer itself. So value is largely about demand and demonstration. Okay, it's demand and demonstration. Quality is about how you treat people and what their experience is. So value is dictated in YouTube terms by topic, title, thumbnail, and timing. It's about indicators of interest. It's about attention. So value is around the viewer attention. It's the relationship and the tension between the viewer and the perception of value to them, which is about getting their attention and their interest. So it's about attraction. Okay. So value is about attention, attraction, interest. Then quality is about what you experience and how you're treated. So that then comes down to what happens when you click on the video and you give it your view. What's the experience that you're having there? And that's quality. Okay. And so then the 4th vector of attack is consistency. And consistency is not just frequency and showing up. It's about showing up and giving the same energy and how you show up. And it's about consistency of the brand, the messaging, consistency of a quality experience, consistency of the packaging of the value, consistency of the clarity of the value, consistent high effort. So those are our 4 vectors of attack. And that's what I teach, is how to optimize and maximize around those things, around what strengths you have to deliver on that, weaknesses that can be addressed and improved, opportunities that presents, threats that you have not seen around the corner that I have through experience. So we do a SWOT analysis: strengths, weaknesses, opportunities, threats. That's what coaching with me and training with me and being part of my pro group, things like that, that's what we look for. And so I bring that and have been refining that over the years, especially with what I'm delivering in the live streams, what I'm delivering in the coaching, what I'm even doing on Twitter. A lot of times people do not understand it because I'm doing something different than them, because I'm looking for a longer tail relationship with my audience and a deeper thing, which is also why I am specifically giving so much value with the freebies the newsletter, the plans that I have, even around $9 value offers that people do not understand why I would do this or why I'm pricing a certain way or this or that. And it's because I'm creating a wedge and leverage now. Because I also know when I get married and I have kids, prices on a lot of things will go up if it involves my time directly. My access, will go down. Like availability will go down, price will go up. It will be scarcity because at that point it's competing with my family. And that will be, the thing that I, will have to value the highest. And so that relationship changes. And so knowing that right now, I can be the most present, the most abundant, the most giving I'm able to be right now, because I know there is a limited window of time for that. I know that the minute that I'm committed to being a family man, that all changes. And it's not that I will essentially ghost people. It's that there will now be a different boundary that has to be established. And I think that that's the goal, by the way. The goal should be for every creator, in my opinion, to be working toward that. Every creator should be working toward that. I mean, unless you're going to be single forever. So that's the plan. And the thing is, I want more creators to have an abundant life where they can exit and they can be the person that they want to be in their relationships, in their family, in their, situation. I want that for people. I think that that's the why most of us are doing this. Most of us are doing this to transform our life, transform the lives of our family, be able to give to the people around us. And so when you consider that that's the goal, you have to plan and act accordingly, and you have to be aligned to that vision. So, that's kind of the thought process. And so, so that's just my thoughts. I just want to go through and just make sure that I did, in fact, get all the super chats, and then we can kind of start to close out. So I believe I got to Charles specifically, and we talked about the coaching levels. Charles, for more info on that, make sure you're checking out awesomecreatoracademy.com. There is a section for coaching if you want to do that. There's also the Academy Pro group if you want to do that. Paint and sound, like I said, I don't think courses are oversaturated because I don't think that most people are making high quality courses, and I don't think most free content is going to truly be aligned to the student learning. I think there's going to be a lot of free content that gets a lot of views, and it's going to be edutainment. I just don't think people are going to be able to use it and actually change and get the transformation. I think a lot of people are going to be entertained. I think stuff's going to get a lot of views. People are going to say how great something is. And they're going to say that because it's free and it costs them nothing, and because they enjoyed the experience, which there's nothing wrong with. Is it going to be usable, and is it going to be the best usage of their time? Probably not. That's my belief. Some of it will be, and straight up tutorials will be. That's why I still believe in and do straight up tutorials and do those for free. But I think that a lot of it will end up being fluff, because that is what the YouTube algorithm is ultimately about, is entertainment. So education will be substituted for edutainment, because that's what the algorithm will reward, because that's what general audiences will reward that. General audiences will not do the work. So Ty's Hot Mess History, thank you for the $20, and thank you for definitely supporting and, advocating for the coaching, since you actually lived through it, experienced it, got it firsthand. Yep. We did Dating Pool Roast. We did Fazu. We did Consumer Appliance Report. We did Chloe. We did Speaking Spanish Now. Our friend Lois. Lead attorney himself. Kansas City Coins. Lois again. Our boy Zach. Scott. Charles again, Dulwit Dad, and Charles. So thank you to everybody who supported. Thank you to everybody who tuned in. Thank you to the 100 of you that stayed till the very end. Thank you. And we will catch you next time. We actually have quite a few live streams scheduled. I will also be uploading videos. I will be uploading videos. Trust me, I'm over editing some as we speak. I'm over editing videos as we speak. So there is that. You guys can enjoy the replay. By sometime tomorrow, I should have at least basic timestamps up. Basic timestamps up tomorrow. I will eventually get to more timestamps. Streamyard will have a transcript, and then I'll try and upload that transcript, so we'll also have that. So thank you to everybody. It was a great live stream. I appreciate all of you. We have several of them scheduled. I think we have a live stream scheduled for Wednesday. I think we have one scheduled for Friday. We have some scheduled for next week. I'm going to rest. Definitely rest my voice at this point. And yeah, I'll catch y'all on the flip side. Stay awesome. We're going to close out, by the way. We're going to close out the stream with my book trailer. You can get my book. I will link it in the description down below, but you could also just type create something awesome or my name into Amazon and you will find that. Thank you once again to our wonderful sponsors. Let's hide the chat so we can get the sponsors up here. But yeah, thank you to our wonderful sponsors, Streamyard, making live streaming simple, OpusClip, perfect for repurposing, and Kajabi, the all-in-one platform for your business in a box. Links are in the description below. Please support the sponsors. But other than that, we're going to close it up and we're going to end with my book trailer so that you can get the book. I finally did it. I finished my book, Create Something Awesome, How Content Creators Are Profiting from Their Passion in the Creator Economy. The book is available now in paperback and in Kindle, where you can read it on any e-reader or device. And I'm really excited about this. The audiobook is coming soon, probably October 2022. Oh my God, it's so great to be able to have this book done, put it up on the bookshelf, and to know that all of you who appreciate it, you want to hear what I have to say about the creator economy, becoming a full-time content creator, and what the experience and lifestyle of being a content creator actually is like. This is the book. I put 20 chapters in here of the most important things I think that content creators could be focusing on today. I talk about the mental health aspect of being a content creator, getting discouraged, imposter syndrome, not charging what you're worth, and mostly actionable advice around monetizing your content properly, but also how to build an audience on your authenticity and what it's really like to start from zero, even today. So if you're interested, make sure you're checking out the book. You can order it on Amazon. You also probably order it in a lot of other places like Barnes & Noble, and it will be coming to other bookstores soon. Really excited about it. Thank you for all the support and love around the book and the positive reviews. Now go ahead and pick it up and make sure you go out there and create something awesome today. Take care.